Question 1. Casualty insurance. In Alaska, under the terms of a standard auto liability insurance policy, which of the following is typically excluded from coverage? A. Bodily injury to pedestrians hit by the insured's vehicle. B. Damage to the insured's own vehicle in a collision. C. Legal defense costs for the insured if sued for an accident. D. Bodily injury to passengers in the insured's vehicle. Answer: B. Damage to the insured's own vehicle in a collision. Explanation: a standard auto liability insurance policy in Alaska generally covers bodily injury and property damage caused by the insured to others, including pedestrians and passengers. It also typically includes legal defense costs if the insured is sued. However, damage to the insured's own vehicle in a collision is excluded from liability coverage and would be covered under a separate collision coverage policy. This distinction is based on the policy provisions and exclusions specific to liability insurance. Liability insurance focuses on protecting the insured from claims made by others, not for the insured's own losses. Question 2. Insurance contracts. Which of the following elements is not essential for the formation of an insurance contract in Alaska? A. Offer and acceptance. B. Legal purpose. C. Consideration. D. Public filing. Answer: D. Public filing. Explanation: for an insurance contract to be valid in Alaska, it must include the following essential elements: offer and acceptance, a mutual agreement between the insurer and the insured. Legal purpose: the contract must be for a lawful objective. And consideration: something of value exchanged between the parties, typically the premium paid by the insured. Public filing is not a requirement for the formation of an insurance contract, although insurance policies and rates must often be filed with and approved by state insurance regulators for consumer protection purposes. This requirement relates to regulatory compliance rather than the fundamental element of contract formation. Question 3. Scenario-based workers' compensation insurance. Jane, an employee in Alaska, suffers an injury while performing her job duties. Her employer has workers' compensation insurance. Which of the following actions should Jane take to ensure she receives benefits under Alaska's workers' compensation laws? A. Jane should sue her employer for negligence in a civil court. B. Jane should notify her employer immediately and file a workers' compensation claim. C. Jane should consult a personal injury lawyer to negotiate a settlement with the employer. D. Jane should seek compensation through her private health insurance policy. Answer: B. Jane should notify her employer immediately and file a workers' compensation claim. Explanation: under Alaska's workers' compensation laws, an injured employee like Jane must notify her employer of the injury as soon as possible and file a workers' compensation claim to receive benefits. Workers' compensation is a no-fault system designed to provide medical benefits and wage replacement to employees injured in the course of employment without the need for litigation. Suing the employer for negligence is generally not allowed under workers' compensation laws, which provide exclusive remedy protections for employers. Consulting a personal injury lawyer or seeking compensation through private health insurance are not appropriate initial steps within the workers' compensation framework, as these avenues are separate from the statutory benefits provided under workers' compensation insurance. Question 4. Coverage and exclusions. In Alaska, which of the following events is typically excluded from a standard homeowner's insurance policy? A. Fire damage. B. Theft of personal property. C. Flood damage. D. Vandalism. Answer: C. Flood damage. Explanation: a standard homeowner's insurance policy in Alaska generally covers events such as fire damage, theft of personal property, and vandalism. However, flood damage is typically excluded from standard homeowners policies. To protect against flood damage, homeowners must purchase a separate flood insurance policy, often through the National Flood Insurance Program (NFIP). This exclusion is based on the inherent risk and the high potential costs associated with flooding, which are not usually covered under standard homeowners insurance due to the need for specialized risk assessment and premium calculation. Question 5. Underwriting considerations. When underwriting a commercial property insurance policy in Alaska, which of the following factors is least likely to influence the underwriter's decision? A. The building's location in a flood zone. B. The age and condition of the building's roof. C. The policyholder's personal credit score. D. The type of business conducted on the premises. Answer: C. The policyholder's personal credit score. Explanation: when underwriting a commercial property insurance policy in Alaska, underwriters primarily focus on factors directly related to the property and the risks associated with the business operations conducted there. These factors include the building's location, e.g., in a flood zone, the age and condition of critical structures like the roof, and the type of business, as different businesses present varying levels of risk. The policyholder's personal credit score is less relevant in commercial property underwriting, as the focus is more on the business's financial health and operational risks rather than personal creditworthiness, which is more pertinent in personal lines underwriting. Question 6. Scenario-based liability and legal concepts. Mr. Thompson, a small business owner in Alaska, is sued by a customer who slipped and fell on the icy sidewalk outside his store. Which of the following actions should Mr. Thompson take to address the lawsuit under his commercial general liability (CGL) policy? A. Attempt to negotiate a private settlement with the customer without informing his insurer. B. Ignore the lawsuit and hope it goes away. C. Notify his insurer immediately and provide all relevant information about the incident. D. Countersue the customer for damages to his business reputation. Answer: C. Notify his insurer immediately and provide all relevant information about the incident. Explanation: under commercial general liability (CGL) policy in Alaska, Mr. Thompson should notify his insurer immediately about the lawsuit and provide all relevant information about the incident. CGL policies typically cover claims of bodily injury and property damage arising from business operations, including slip and fall accidents. The insurer has a duty to defend the insured in such lawsuits, including covering legal defense costs and potential settlements or judgments up to the policy limits. Attempting to negotiate privately, ignoring the lawsuit, or countersuing the customer are not advisable actions, as they can jeopardize coverage and violate policy terms, potentially leading to denial of claims or further legal complications. Question 7. Policy provisions and endorsements. In Alaska, which of the following endorsements can be added to a standard homeowner's insurance policy to provide coverage for expensive personal items like jewelry and fine art? A. Inflation guard endorsement. B. Scheduled personal property endorsement. C. Earthquake endorsement. D. Water backup endorsement. Answer: B. Scheduled personal property endorsement. Explanation: a scheduled personal property endorsement, also known as a personal articles floater, can be added to a standard homeowner's insurance policy in Alaska to provide specific coverage for high-value items like jewelry, fine art, and collectibles. This endorsement allows the policyholder to list or schedule each item individually and insure it for its appraised value, offering broader protection than the standard policy, which often has limits on coverage for such items. The Inflation Guard endorsement adjusts coverage limits based on inflation rates. The Earthquake endorsement covers damage from earthquakes, and the Water Backup endorsement covers damage from water backup through sewers or drains. None of these endorsements specifically provide additional coverage for expensive personal items. Question 8. Underwriting considerations. In Alaska, an underwriter is evaluating a homeowner's insurance application. Which of the following factors is the least likely to affect the underwriter's decision? A. The proximity of the home to a fire station. B. The homeowner's marital status. C. The age of the home. D. The presence of a swimming pool on the property. Answer: B. The homeowner's marital status. Explanation: when underwriting a homeowner's insurance policy in Alaska, underwriters consider factors that directly affect the risk of insuring the property. These include the proximity of the home to a fire station, affects response time in case of a fire, the age of the home. Older homes may have outdated wiring or plumbing, and the presence of a swimming pool increases liability risk. The homeowner's marital status, however, is generally not a significant factor in the underwriting process for homeowners insurance, as it does not directly impact the risk of property damage or liability claims. Underwriting focuses more on the physical characteristics of the property and its usage rather than personal demographic information. Question 9. Scenario-based claims handling process. Sarah, a resident of Alaska, experiences a burst pipe in her home during a particularly cold winter. She files a claim with her homeowner's insurance. Which of the following steps should Sarah expect her insurance company to take first in the claims handling process? A. Deny the claim if it's under the deductible amount. B. Immediately send a check for estimated damages. C. Conduct an investigation to verify the cause and extent of the damage. D. Refer Sarah to a contractor to begin repairs. Answer: C. Conduct an investigation to verify the cause and extent of the damage. Explanation: in Alaska, as in other states, the first step an insurance company typically takes in the claims handling process is to conduct an investigation to verify the cause and extent of the damage. This involves sending an adjuster to inspect the property, assess the damage, and determine if the loss is covered under the policy terms. The investigation ensures that the claim is valid and that the amount of damage is accurately documented. Denying the claim or sending a check without proper assessment would be premature and against standard claims procedures. Referring the policyholder to a contractor usually comes after the claim has been investigated and approved. This process is governed by the claims handling guidelines outlined by the Alaska Division of Insurance and Standard Industry Practices. Question 10. Policy interpretation and analysis. In Alaska, which of the following is generally not considered an occurrence under a standard commercial general liability (CGL) policy? A. A slip and fall accident at the insured's premises. B. A fire that damages the insured's property. C. A customer's allergic reaction to a product sold by the insured. D. A defamatory statement made by the insured's employee. B. A fire that damages the insured's property. Explanation: under a standard commercial general liability (CGL) policy in Alaska, an occurrence typically refers to an accident including continuous or repeated exposure to substantially the same general harmful conditions that results in bodily injury or property damage to others. A slip and fall accident, an allergic reaction to a product, and a defamatory statement made by an employee are all examples of occurrences that could result in claims against the insured for harm caused to third parties. However, a fire that damages the insured's own property is not considered an occurrence under a CGL policy, as this type of policy is designed to cover liabilities to third parties, not damage to the insured's own property. Property damage to the insured's premises would be covered under a commercial property insurance policy instead. Question 11. State insurance laws and regulations. In Alaska, which of the following is a primary responsibility of the Alaska Division of Insurance? A. Setting premium rates for all insurance policies. B. Conducting financial examinations of insurance companies. C. Issuing securities to fund state insurance programs. D. Determining the guilt or innocence of insurance fraud suspects. Answer: B. Conducting financial examinations of insurance companies. Explanation: the Alaska Division of Insurance is responsible for regulating the insurance industry within the state, which includes conducting financial examinations of insurance companies to ensure their solvency and compliance with state laws. This regulatory oversight helps protect consumers by ensuring that insurers are financially sound and capable of paying claims. Setting premium rates is typically the responsibility of the insurance companies, subject to regulatory approval. Issuing securities is not within the purview of the Division of Insurance. It is usually the function of financial institutions or government finance departments. Determining the guilt or innocence of insurance fraud suspects is a legal matter handled by law enforcement and the judiciary, not the regulatory authority. Question 12. Scenario-based insurance claims. Michael, a business owner in Alaska, discovers that his warehouse was burglarized and several valuable items were stolen. He files a claim with his commercial property insurer. Which of the following actions should Michael expect his insurer to take first in the claims process? A. Request a detailed inventory of the stolen items. B. Issue an immediate payment based on the policy limits. C. Deny the claim due to lack of security measures. D. Increases future premiums. Answer A. Request a detailed inventory of the stolen items. Explanation: in Alaska, when a business owner like Michael files a claim for stolen items under a commercial property insurance policy, the insurer will first request a detailed inventory of the stolen items. This helps the insurer assess the extent of the loss and verify the items covered under the policy. The insurer will typically require documentation, such as receipts or photos, to substantiate the claim. issuing an immediate payment without proper verification, denying the claim outright, or increasing future premiums are not appropriate initial responses. The insurer needs to conduct a thorough investigation and determine the validity and value of the claim before proceeding with payment. Future premium adjustments may occur based on the claim history, but this is not the insurer's first action in the claims process. Question 13. Types of property insurance policies. In Alaska, which type of policy would provide coverage for both the building and its contents? For a small business owner, A. Dwelling policy. B. Business owner's policy. BOP. C. Commercial property policy. D. Homeowner's policy. Answer: B. Business owner's policy. BOP. Explanation: in Alaska, a business owner's policy (BOP) is designed for small to medium-sized businesses and provides a package of coverage, typically including both building and contents insurance along with liability coverage. A BOP is a convenient and cost-effective solution combining various coverages into a single policy. The dwelling policy is generally used for residential properties, while a commercial property policy covers commercial buildings and contents but may require separate liability coverage. A homeowner's policy is intended for personal residences and does not cover business activities or commercial properties. Question 14. Valuation of property. Under Alaska law, which valuation method is typically used for settling claims under a replacement cost policy for commercial property? A. Actual cash value (ACV). B. Market value. C. Replacement cost value (RCV). D. Agreed value. Answer: C. Replacement cost value (RCV). Explanation: in Alaska, replacement cost value (RCV) is the method typically used for settling claims under a replacement cost policy. RCV covers the cost to repair or replace the damaged property with materials of like kind and quality without deducting for depreciation. This approach ensures that the policyholder can restore the property to its pre-loss condition. Actual cash value (ACV) deducts depreciation from the replacement cost, and market value is not commonly used for insurance claims. Agreed value is a specific endorsement that sets the value of the property at the time of the policy agreement, but it is not standard for all replacement cost policies. Question 15. Insurance policy analysis. In analyzing a commercial general liability (CGL) policy in Alaska, which section outlines the insurer's obligation to defend the insured against lawsuits? A. Declarations page. B. Insuring agreement. C. Exclusions section. D. Conditions section. Answer: B. Insuring agreement. Explanation: in a commercial general liability (CGL) policy in Alaska, the insuring agreement is the section that outlines the insurer's obligation to defend the insured against lawsuits. This section specifies the coverage provided, including the duty to defend and the types of claims covered, such as bodily injury, property damage, and personal injury. The declarations page provides key details about the policy, such as the insured's name, coverage limits, and policy period. The exclusions section lists specific situations or risks that are not covered by the policy, and the conditions section details the terms and requirements the insured must meet for coverage to apply. Question 16. Policy provisions and endorsements. In Alaska, which endorsement to a homeowner's insurance policy would provide additional coverage for damages caused by earthquakes? A. Inflation guard endorsement. B. Earthquake endorsement. C. Scheduled personal property endorsement. D. Water backup endorsement. Answer: B. Earthquake endorsement. Explanation: in Alaska, to obtain coverage for damages caused by earthquakes, a homeowner would need to add an earthquake endorsement to their homeowner's insurance policy. This endorsement specifically provides coverage for losses resulting from seismic activity, which is not included in a standard homeowner's policy. The Inflation Guard endorsement adjusts coverage limits to account for inflation. The Scheduled Personal Property endorsement provides additional coverage for high-value items, and the Water Backup endorsement covers damage from water backing up through sewers or drains. None of these other endorsements address earthquake damage, making the earthquake endorsement essential for this type of risk. Question 17. Workers' compensation insurance. In Alaska, which of the following benefits is not typically provided by workers' compensation insurance? A. Medical expenses for work-related injuries. B. Disability income benefits. C. Compensation for pain and suffering. D. Rehabilitation services. Answer: C. Compensation for pain and suffering. Explanation: in Alaska, workers' compensation insurance typically provides benefits for medical expenses, disability income, and rehabilitation services for employees who suffer work-related injuries or illnesses. However, compensation for pain and suffering is not included under workers' compensation coverage. Workers' compensation is designed to cover direct economic losses and medical costs, rather than non-economic damages like pain and suffering, which are generally addressed in personal injury lawsuits outside the workers' compensation system. This distinction is based on the principles of no-fault insurance, which aims to provide prompt and guaranteed benefits to injured workers without the need for litigation. Question 18. Scenario-based casualty insurance basics. David, a resident of Alaska, has purchased an auto insurance policy that includes liability coverage. He causes an accident resulting in damage to another driver's car and bodily injuries to that driver. Which of the following actions should David expect his auto liability insurer to take? A. Refuse to pay any claims because David was at fault. B. Pay for the damages to David's car and his medical bills. C. Cover the other driver's car repair costs and medical expenses up to policy limits. D. Cancel David's policy immediately for causing the accident. Answer: C. Cover the other driver's car repair costs and medical expenses up to policy limits. Explanation: under an auto insurance policy with liability coverage in Alaska, David's insurer is responsible for covering the costs of damages and bodily injuries he caused to the other driver up to the policy limits. This includes paying for the other driver's car repair costs and medical expenses. Liability insurance is designed to protect the insured from financial loss due to claims made by third parties for injuries or damages the insured is legally responsible for. The insurer will not cover David's own car repair costs or his medical bills under liability coverage, as those would be addressed by collision and medical payments or personal injury protection (PIG) coverage, respectively. Additionally, insurers do not typically cancel policies immediately after an at-fault accident, but may consider policy renewal and premium adjustments based on the claim history. Question 19. Casualty insurance basics. In Alaska, which of the following is typically NOT covered under a personal umbrella liability policy? A. Excess liability coverage above the limits of an auto insurance policy. B. Excess liability coverage above the limits of a homeowner's insurance policy. C. Liability for personal injury claims like libel and slander. D. Property damage to the insured's own home. Answer: D. Property damage to the insured's own home. Explanation: a personal umbrella liability policy in Alaska is designed to provide excess liability coverage beyond the limits of underlying policies such as auto and homeowners insurance. It also covers personal injury claims such as libel and slander. However, property damage to the insured's own home is not covered under a personal umbrella policy. Instead, property damage to the insured's home would be covered under a homeowner's insurance policy. The umbrella policy focuses on providing additional liability protection rather than coverage for the insured's property. Question 20. Coverage and exclusions. In Alaska, which of the following is typically excluded from coverage under a standard commercial property insurance policy? A. Fire damage to the building. B. Theft of business inventory. C. Damage from employee dishonesty. D. Vandalism to the property. Answer: C. Damage from employee dishonesty. Explanation: a standard commercial property insurance policy in Alaska typically covers perils such as fire damage, theft of business inventory, and vandalism. However, damage or loss resulting from employee dishonesty, such as theft or embezzlement by employees, is generally excluded from standard commercial property coverage. To cover such risks, businesses can purchase a separate fidelity bond or employee dishonesty insurance. This specific coverage addresses the unique risk of internal theft and provides protection against financial loss due to dishonest acts committed by employees. Question 21. Scenario-based liability and legal concepts. Lisa, an Alaskan resident, operates a small daycare business from her home. A child in her care falls and is injured on the playground equipment. Which of the following actions should Lisa take to address the situation under her homeowner's insurance policy? A. Ignore the incident, assuming it will not result in a claim. B. Contact her homeowner's insurance company and report the incident immediately. C. Pay for the child's medical expenses out of pocket. D. Assume the child's parents will not take any legal action. Answer: B. Contact her homeowner's insurance company and report the incident immediately. Explanation: in Alaska, if Lisa operates a small daycare business from her home and a child in her care is injured, she should contact her homeowner's insurance company and report the incident immediately. This action is essential to ensure that the insurer is aware of the potential liability claim and can begin the claims process. Homeowners insurance policies typically have liability coverage that may help cover medical expenses and legal fees resulting from accidents on the property. Ignoring the incident, paying out of pocket without consulting the insurer, or assuming no legal action will be taken are not advisable actions, as they can jeopardize the coverage and the insurer's ability to defend against any claims. Reporting the incident promptly ensures compliance with policy terms and enables the insurer to handle the situation appropriately. Question 22. Insurance contracts. In Alaska, which of the following is a required element for a valid insurance contract? A. A written document signed by both parties. B. A premium payment made at the time of application. C. A legal purpose for the contract. D. A specific expiration date for the policy. Answer: C. A legal purpose for the contract. Explanation: for an insurance contract to be valid in Alaska, it must have a legal purpose, meaning it must be for a lawful objective and not against public policy. The other required elements of a valid insurance contract include an offer and acceptance, mutual agreement, consideration, something of value exchanged such as the premium, and competent parties. Both the insurer and the insured must have legal capacity to contract. While a written document and premium payment are typically involved, they are not strictly necessary for the contract to be valid. The specific expiration date is part of the policy details but not an essential element for the formation of the contract. Question 23. Underwriting considerations. When underwriting a homeowner's insurance policy in Alaska, which of the following factors is most likely to influence the premium? A. The policyholder's marital status. B. The type of heating system in the home. C. The policyholder's employment history. D. The proximity of the home to a grocery store. Answer: B. The type of heating system in the home. Explanation: when underwriting a homeowner's insurance policy in Alaska, the type of heating system in the home is a significant factor influencing the premium. Different heating systems have varying levels of risk associated with them. For example, a home with a wood stove might pose a higher fire risk compared to one with a central heating system. Insurers assess these risks to determine the appropriate premium. The policyholder's marital status and employment history are less relevant to homeowners insurance underwriting, and the proximity of the home to a grocery store does not typically affect the insurance risk or premium. Question 24. Scenario-based claims handling process. John, a resident of Alaska, discovers extensive water damage in his basement due to a burst pipe. He files a claim with his homeowner's insurance company. Which of the following actions should John expect the insurer to take first? A. Deny the claim if the damage is minor. B. Immediately send a contractor to start repairs. C. Schedule an inspection to assess the damage. D. Offer a settlement without further investigation. Answer: C. Schedule an inspection to assess the damage. Explanation: when John files a claim for water damage due to a burst pipe, his homeowner's insurance company will first schedule an inspection to assess the damage. This step is crucial for the insurer to verify the cause and extent of the damage and to determine coverage under the policy terms. Denying the claim without assessment, sending a contractor immediately, or offering a settlement without investigation would be premature and not aligned with standard claims handling procedures. The inspection ensures that the claim is accurately documented and that appropriate measures are taken to repair the damage and settle the claim according to the policy provisions and Alaska state insurance regulations. Question 25. Insurance policy analysis. In Alaska, which of the following sections of a homeowner's insurance policy outlines the specific events that are not covered by the policy? A. Declarations page. B. Insuring agreement. C. Exclusions section. D. Conditions section. Answer: See Exclusions section. Explanation. The Exclusions section of a homeowner's insurance policy in Alaska outlines the specific events and circumstances that are not covered by the policy. This section is crucial for policyholders to understand the limitations of their coverage. The Declarations page provides an overview of the policy details, including the insured's information and coverage limits. The insuring agreement describes the coverage provided and the insurer's obligations. The Conditions section lists the terms and requirements that the policyholder must meet for coverage to apply. Understanding the exclusions is essential for managing risk and knowing when additional coverage may be needed. Question 26. Insurance underwriting. In Alaska, which of the following underwriting factors would most likely result in a higher premium for a commercial auto insurance policy? A. The age of the vehicles in the fleet. B. The credit score of the business owner. C. The location of the business headquarters. D. The number of employees in the business. Answer A. The age of the vehicles in the fleet. Explanation. In Alaska, the age of the vehicles in a commercial auto fleet is a significant underwriting factor that can result in a higher premium. Older vehicles may be more prone to mechanical issues and breakdowns, leading to a higher risk of claims. Additionally, older vehicles may lack the latest safety features, increasing the risk of accidents, while the credit score of the business owner, the location of the business headquarters, and the number of employees are relevant underwriting considerations. The age of the vehicles has a more direct impact on the risk associated with insuring a commercial auto fleet. Question 27. Scenario-based ethics and professional conduct. Sarah, an insurance agent in Alaska, discovers that one of her clients has intentionally provided false information on an insurance application to obtain a low premium. Which of the following actions should Sarah take in accordance with professional ethics and state regulations? A. Ignore the false information and process the application as is. B. Contact the client to request a correction and resubmission of the application. C. Adjust the application herself to correct the information. D. Report the incident to the Alaska Division of Insurance. Answer. B. Contact the client to request a correction and resubmission of the application. Explanation. As an insurance agent in Alaska, Sarah should adhere to professional ethics and state regulations by contacting the client to request a correction and resubmission of the application. It is essential to ensure that all information on an insurance application is accurate and truthful to maintain the integrity of the underwriting process and avoid potential issues with coverage and claims. Ignoring the false information, adjusting the application herself, or immediately reporting the incident without first addressing it with the client would not be appropriate actions. By giving the client the opportunity to correct the information, Sarah upholds ethical standards and regulatory compliance while also ensuring the accuracy of the application. If the client refuses to correct the information, then Sarah may need to escalate the matter to the Alaska Division of Insurance. Question 28. Coverage and exclusions. In Alaska, which of the following types of property is typically excluded from coverage under a standard homeowner's insurance policy? A. Personal property stored in an off-site storage unit. B. Jewelry valued at $1,500. C. Cash totaling $500. D. Pets. Answer. D. Pets. Explanation. Under the standard homeowner's insurance policy in Alaska, pets are typically excluded from coverage. Homeowner's insurance covers personal property, but there are specific exclusions and limits. While personal property stored in an off-site storage unit and jewelry valued at $1,500 are generally covered, with certain limits for high-value items, and cash is covered up to a specified limit, usually $200, $500. Pets are not covered. Separate pet insurance is needed to cover veterinary costs and other expenses related to pets. Question 29. Liability and legal concepts. In Alaska, which of the following best describes strict liability as it pertains to personal injury cases? A. Liability based on negligence. B. Liability regardless of fault. C. Liability only if intentional harm is proven. D. Liability limited to contract breaches. Answer. B. Liability regardless of fault. Explanation. Strict liability in Alaska, as in other jurisdictions, refers to a legal doctrine where a party is held liable for damages regardless of fault or negligence. This is often applied in cases involving inherently dangerous activities, defective products, or certain animal attacks. Under strict liability, the injured party does not need to prove that the defendant was negligent or intended to cause harm. Instead, they only need to demonstrate that the activity or product caused their injury. This principle is designed to ensure that parties engaging in risky activities or producing potentially hazardous products are held responsible for any resulting harm. Question 30. Scenario-based insurance claims. Maria, a resident of Alaska, has a homeowner's insurance policy that includes coverage for personal liability. While hosting a party, one of her guests slipped on an icy walkway and sustains injuries. Which of the following steps should Maria take immediately after the incident? A. Ignore the incident since it occurred on her property. B. Pay for the guest's medical expenses out of pocket. C. Report the incident to her homeowner's insurance company. D. Ask the guest to sign a waiver of liability. Answer: C. Report the incident to her homeowner's insurance company. Explanation: after an incident where a guest is injured on a property, Maria should report the incident to her homeowner's insurance company immediately. This is essential to initiate the claims process and ensure that her liability coverage can be applied to cover any potential medical expenses and legal fees associated with the guest's injury. Ignoring the incident, paying out of pocket, or asking the guest to sign a waiver of liability are not appropriate actions. Reporting the incident promptly helps protect Maria from potential legal and financial consequences and ensures that the insurer can handle the claim according to the policy provisions and Alaska state regulations. Question 31. State insurance laws and regulations. In Alaska, which entity is responsible for overseeing and regulating insurance producers and ensuring compliance with state insurance laws? A. Alaska Division of Insurance. B. Alaska Department of Commerce. C. Alaska Insurance Regulatory Authority. D. Alaska Insurance Commission. Answer A. Alaska Division of Insurance. Explanation: the Alaska Division of Insurance is responsible for overseeing and regulating insurance producers, agents, and brokers and ensuring compliance with state insurance laws and regulations. This division operates under the Alaska Department of Commerce, Community, and Economic Development. Its primary role includes licensing insurance professionals, monitoring insurer solvency, investigating consumer complaints, and enforcing insurance laws to protect consumers and maintain fair market practices. The other options, Alaska Department of Commerce, Alaska Insurance Regulatory Authority, and Alaska Insurance Commission, are not specific regulatory bodies responsible for insurance oversight in Alaska. Question 32. Insurance industry trends and developments. In Alaska, what emerging trend in insurance technology, InsurTech, is likely to impact the insurance industry in the near future? A. Increased use of artificial intelligence for claims processing. B. Expansion of traditional brick-and-mortar insurance agencies. C. Decreased reliance on digital platforms for policy sales. D. Reduction in cybersecurity measures for insurance data. Answer A. Increased use of artificial intelligence for claims processing. Explanation: in Alaska, as in the broader insurance industry, one emerging trend in InsurTech is the increased use of artificial intelligence (AI) for claims processing. AI technologies can analyze large volumes of data quickly and accurately, assess claims for validity, detect fraudulent claims, and streamline the claims handling process. This trend aims to improve efficiency, reduce costs, and enhance customer satisfaction by expediting claims resolution. The expansion of traditional brick-and-mortar agencies, decreased reliance on digital platforms, and reduction in cybersecurity measures are not consistent with current trends in InsurTech, which generally focus on enhancing digital capabilities and leveraging AI and data analytics. Question 33. Ethics and professional conduct. In Alaska, which ethical principle requires insurance agents to act in the best interests of their clients and disclose any conflicts of interest? A. Duty of loyalty. B. Duty of competence. C. Duty of confidentiality. D. Duty of disclosure. Answer A. Duty of loyalty. Explanation: in Alaska, insurance agents are bound by the duty of loyalty, which requires them to act in the best interests of their clients and disclose any conflicts of interest that may affect their ability to provide unbiased advice. This ethical principle underscores the importance of prioritizing the client's needs, maintaining transparency, and avoiding conflicts that could compromise the agent's integrity or impartiality. The duty of competence emphasizes the agent's obligation to possess the necessary knowledge and skills to provide professional service. The duty of confidentiality requires agents to protect client information, and the duty of disclosure mandates transparency in communicating relevant information to clients. Question 34. Insurance claims. In Alaska, which party has the responsibility to prove that a loss is covered under an insurance policy? A. The insurance company. B. The insured. C. The insurance adjuster. D. The insurance agent. Answer: B. The insured. Explanation: in Alaska, as in most jurisdictions, the burden of proof typically rests with the insured to demonstrate that a loss is covered under an insurance policy. This means that the insured must provide evidence and documentation to support their claim and show that the loss meets the policy's coverage requirements. The insurance company evaluates the claim based on the information provided by the insured and conducts its own investigation to verify the claim's validity. Insurance adjusters and agents facilitate the claims process and provide support, but they do not bear the burden of proving coverage. That responsibility lies with the insured. Question 35. Policy provisions and endorsements. In Alaska, which type of insurance policy endorsement would provide coverage for damage caused by a flood? A. Earthquake endorsement. B. Flood insurance endorsement. C. Umbrella insurance endorsement. D. Scheduled personal property endorsement. Answer: B. Flood insurance endorsement. Explanation: in Alaska, a flood insurance endorsement is specifically added to a standard homeowners or commercial property insurance policy to provide coverage for damages caused by a flood. Flood damage is typically excluded from standard property insurance policies, so property owners in flood-prone areas may purchase a separate flood insurance policy or add a flood endorsement to their existing policy. An earthquake endorsement provides coverage for earthquake damage. An umbrella insurance endorsement extends liability coverage beyond underlying policies, and a scheduled personal property endorsement increases coverage limits for specified high-value items. Question 36. Workers' compensation insurance. In Alaska, which entity administers the state's workers' compensation program and ensures compliance with state laws? A. Alaska Department of Labor and Workforce Development. B. Alaska Department of Health and Social Services. C. Alaska Workers' Compensation Board. D. Alaska Division of Insurance. Answer: A. Alaska Department of Labor and Workforce Development. Explanation: the Alaska Department of Labor and Workforce Development administers the state's workers' compensation program and ensures compliance with state laws governing workers' compensation insurance. This department oversees the Workers' Compensation Board, which handles disputes and adjudicates claims related to workers' compensation benefits in Alaska. The Alaska Division of Insurance, under the Department of Commerce, Community, and Economic Development, regulates insurance producers and ensures compliance with insurance laws, but is not directly responsible for administering the workers' compensation program. Question 37. Insurance contract formation. In Alaska, which element is essential for the formation of a valid insurance contract? A. Payment of the policy premium. B. A written agreement signed by both parties. C. Consideration exchanged between the parties. D. Approval by the Alaska Division of Insurance. Answer: C. Consideration exchanged between the parties. Explanation: in Alaska, as in most jurisdictions, consideration exchange between the parties is essential for the formation of a valid insurance contract. Consideration refers to something of value exchanged between the insurer, coverage and benefits, and the insured, payment of premium. This mutual exchange distinguishes an insurance contract from a gratuitous promise or gift. While payment of the policy premium is necessary for coverage to take effect, it is part of the consideration exchanged and not the sole element required for contract formation. A written agreement signed by both parties and approval by the Alaska Division of Insurance are important aspects of formalizing the contract, but are not as fundamental as consideration in establishing the contract's validity. Question 38. Underwriting considerations. When underwriting a commercial property insurance policy in Alaska, Which factor is most likely to influence the premium? A. The policyholder's annual revenue. B. The number of employees at the business. C. The construction materials used in the building. D. The distance to the nearest fire station. Answer: C. The construction materials used in the building. Explanation: in Alaska, the construction materials used in the building are a significant factor influencing the premium for commercial property insurance. Different materials have varying susceptibility to damage from perils such as fire, wind, and water, affecting the insurance risk and premium. Factors such as the policyholder's annual revenue, the number of employees, and the distance to the nearest fire station may also impact the risk assessment and premium calculation, but are generally secondary to the construction materials in terms of influencing the insurance premium directly. Question 39. Scenario-based coverage and exclusions. Jacob, a homeowner in Alaska, recently installed a swimming pool in his backyard. He wants to ensure that he has coverage for potential liability risks associated with the pool. Which of the following actions should Jacob take? A. Contact his insurance agent to add an umbrella insurance policy. B. Install additional security cameras around the pool area. C. Wait until his next policy renewal to inquire about coverage options. D. Remove the swimming pool to avoid potential liability. Answer: A. Contact his insurance agent to add an umbrella insurance policy. Explanation: to ensure coverage for potential liability risks associated with the swimming pool, Jacob should contact his insurance agent to add an umbrella insurance policy to his homeowner's insurance. An umbrella policy provides additional liability coverage beyond the limits of the primary homeowner's insurance policy. This coverage extension is particularly beneficial for high-risk features such as swimming pools, which may increase liability exposure due to potential accidents or injuries. Installing security cameras or removing the pool are not insurance solutions and do not address liability coverage directly. Waiting until the next policy renewal may delay obtaining adequate coverage for the pool-related risks. Question 40. Policy interpretation and analysis. In Alaska, which section of an insurance policy typically defines the responsibilities and obligations of the insured and the insurer? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: B. Conditions. Explanation. In Alaska, the conditions section of an insurance policy typically defines the responsibilities and obligations of both the insured and the insurer. This section outlines the duties that each party must fulfill to maintain coverage under the policy. Conditions may include requirements such as timely payment of premiums, cooperation in claims investigations, notification of changes in risk exposure, and procedures for filing claims. Insuring agreements describe the coverage provided, exclusions specify what is not covered, and declarations provide details about the policyholder and insured property. Question 41. Insurance industry trends and developments. In Alaska, what recent trend in insurance has been driven by advancements in digital technology and data analytics? A. Increased reliance on paper-based policy documentation. B. Expansion of traditional insurance agency networks. C. Growth of usage-based insurance (UBI) programs. D. Decrease in online policy purchasing options. Answer: C. Growth of usage-based insurance (UBI) programs. Explanation: in Alaska, as in other regions, advancements in digital technology and data analytics have driven the growth of usage-based insurance (UBI) programs. UBI programs use telematics and other technologies to track policyholders' driving behaviors, property usage, or other relevant data. Insurers can then adjust premiums based on actual risk exposure, providing more personalized pricing and incentives for safer behaviors. This trend reflects a broader industry shift towards leveraging data-driven insights to enhance underwriting accuracy, improve risk management, and offer more customized insurance solutions. The expansion of traditional insurance agency networks, decreased reliance on paper-based documentation, and increase in online policy purchasing options are also trends influenced by digital advancements but do not specifically relate to UBI programs. Question 42. Scenario-based workers' compensation insurance. Tom owns a construction company in Alaska and employs several workers. One of his employees is injured while operating heavy machinery on a job site. What is Tom's primary responsibility under Alaska's workers' compensation laws? A. Deny the worker's claim to avoid increased insurance premiums. B. Immediately terminate the injured employee. C. Provide medical benefits and wage replacement to the injured employee. D. Request reimbursement from the injured employee for medical expenses. Answer: C. Provide medical benefits and wage replacement to the injured employee. Explanation: under Alaska's workers' compensation laws, Tom's primary responsibility as an employer is to provide medical benefits and wage replacement to an injured employee who suffers a work-related injury or illness. Workers' compensation insurance is designed to cover these costs and protect both employers and employees in the event of workplace injuries. Denying a valid claim or terminating an injured employee for filing a claim would violate workers' compensation laws and expose Tom to legal and financial liabilities. Requesting reimbursement from the injured employee for medical expenses is not permissible under workers' compensation insurance, as the employer is responsible for providing these benefits as required by law. Question 43. Casualty insurance. In Alaska, which type of casualty insurance policy typically covers legal expenses and damages resulting from lawsuits filed against an individual or business for negligence? A. Auto insurance policy. B. Umbrella liability insurance policy. C. Homeowners insurance policy. D. Workers' compensation insurance policy. Answer: B. Umbrella liability insurance policy. Explanation: an umbrella liability insurance policy in Alaska typically covers legal expenses and damages resulting from lawsuits filed against an individual or business for negligence. This policy provides additional liability coverage that extends beyond the limits of primary insurance policies, such as auto and homeowners insurance. It helps protect policyholders from significant financial losses due to lawsuits involving bodily injury, property damage, or personal injury claims. Auto insurance policies primarily cover damages related to vehicle accidents. Homeowners insurance policies cover property damage and liability within the home, and workers' compensation insurance policies cover injuries to employees in the workplace. Question 44. Ethics and professional conduct. In Alaska, which ethical principle requires insurance agents to act honestly and fairly in their dealings with clients and avoid misrepresentation? A. Duty of loyalty. B. Duty of competence. C. Duty of disclosure. D. Duty of good faith. Answer: D. Duty of good faith. Explanation: in Alaska, insurance agents are bound by the duty of good faith, which requires them to act honestly and fairly in their dealings with clients and to avoid misrepresentation of information. This ethical principle emphasizes the importance of maintaining trust and integrity in all aspects of insurance transactions. The duty of loyalty relates to acting in the best interests of clients. The duty of competence requires agents to possess the necessary knowledge and skills, and the duty of disclosure mandates transparency in providing relevant information to clients. However, the duty of good faith specifically focuses on honesty, fairness, and ethical conduct in interactions with clients. Question 45. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the specific perils or events that are covered under the policy? A. Declarations page. B. Exclusions section. C. Insuring agreements. D. Conditions section. Answer: C. Insuring agreements. Explanation: in Alaska, the insuring agreements section of an insurance policy typically outlines the specific perils or events that are covered under the policy. This section specifies the scope of coverage provided by the insurer, including the types of losses or damages for which the insured is protected. The declarations page provides details about the policyholder insured property and coverage limits. The exclusions section lists perils or events that are not covered under the policy. The conditions section describes the obligations and responsibilities of both the insured and the insurer, such as premium payment, claims procedures, and policy cancellation terms. Question 46. Underwriting considerations. When underwriting a commercial liability insurance policy in Alaska, which factor is typically evaluated to assess the risk of potential claims? A. The business owner's personal credit score. B. The number of years the business has been operating. C. The location of the business premises. D. The age of the business owner. Answer: C. The location of the business premises. Explanation: in Alaska, the location of the business premises is a significant factor evaluated when underwriting a commercial liability insurance policy. The location affects the risk exposure to perils such as crime rates, natural disasters, and proximity to hazardous areas. Insurers assess these factors to determine the likelihood of claims and the appropriate premium rates, while the business owner's personal credit score, the number of years in operation, and the age of the business owner may also be considered in underwriting. The location of the business premises directly impacts the risk assessment for liability insurance purposes. Question 47. Insurance claims. In Alaska, which principle guides the insurance company's obligation to handle claims promptly and fairly? A. Principle of indemnity. B. Principle of subrogation. C. Principle of utmost good faith. D. Principle of proximate cause. Answer: C. Principle of utmost good faith. Explanation: in Alaska, as in insurance law generally, the principle of utmost good faith, or uberumi fide, guides the insurance company's obligation to handle claims promptly and fairly. This principle requires both the insurer and the insured to act honestly and transparently in their dealings. Insurers are obligated to investigate claims thoroughly, evaluate them fairly, and settle them promptly within the terms of the insurance policy. The principle of indemnity relates to restoring the insured to the same financial position they were in before the loss occurred. Subrogation refers to the insurer's right to pursue third parties responsible for the loss, and proximate cause determines whether a loss is covered under the policy. Question 48. Scenario-based insurance policy analysis. Emily, a homeowner in Alaska, experienced severe wind damage to her roof during a storm. She files a claim with her homeowner's insurance company. According to Alaska state regulations, what should Emily expect during the claims handling process? A. Immediate denial of the claim due to weather-related damage. B. A detailed inspection of the damaged property. C. Automatic approval of the claim without investigation. D. Requirement to provide proof of previous roof repairs. Answer: B. A detailed inspection of the damaged property. Explanation: in Alaska, when Emily files a homeowner's insurance claim for wind damage to her roof, she should expect a detailed inspection of the damaged property by her insurance company. This inspection is necessary to assess the extent of the damage, verify the cause, wind-related in this case, and determine the coverage under the policy. Immediate denial without investigation or automatic approval without inspection would not comply with Alaska state regulations, which require insurers to conduct a fair and thorough evaluation of claims. While Emily may need to provide documentation or proof related to the previous condition of the roof, the initial step would be the inspection to assess the current damage and determine the appropriate coverage and settlement. Question 49. Insurance contract formation. In Alaska, which legal concept ensures that an insurance contract is enforceable only if both parties have exchanged something of value? A. Offer and acceptance. B. Consideration. C. Capacity. D. Legality. Answer: B. Consideration. Explanation: in Alaska, as in contract law generally, consideration ensures that an insurance contract is enforceable. Consideration refers to the exchange of something of value, such as payment of premiums by the insured and the promise of coverage by the insurer between the parties to the contract. This mutual exchange distinguishes a binding contract from a gratuitous promise or gift. Offer and acceptance establish mutual consent to the contract terms. Capacity ensures that both parties are legally capable of entering into the contract, and legality ensures that the contract's purpose and terms comply with applicable laws and regulations. However, consideration is specifically essential to the formation and enforceability of an insurance contract. Question 50. Ethics and professional conduct. As an insurance agent in Alaska, James has a client who is shopping for a new homeowner's insurance policy. Which ethical principle requires James to provide accurate and complete information about available coverage options? A. Duty of loyalty. B. Duty of disclosure. C. Duty of competence. D. Duty of good faith. Answer: B. Duty of disclosure. Explanation: in Alaska, the duty of disclosure requires insurance agents like James to provide accurate and complete information about available coverage options to clients. This ethical principle ensures that clients can make informed decisions about their insurance needs based on clear and transparent information provided by the agent. The duty of loyalty requires agents to act in the best interest of their clients. The duty of competence requires agents to possess the necessary knowledge and skills to provide professional service, and the duty of good faith obligates agents to act honestly and fairly in all dealings. However, the duty of disclosure specifically pertains to providing comprehensive information to clients to enable informed decision-making. Question 51. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the procedure that the insured must follow when filing a claim? A. Insuring agreements. B. Exclusions. C. Conditions. D. Declarations. Answer: C. Conditions. Explanation: in Alaska, the conditions section of an insurance policy typically outlines the procedures that the insured must follow when filing a claim. This section specifies the obligations and responsibilities of both the insured and the insurer, including the steps and documentation required to initiate and process a claim. Conditions may include requirements such as notifying the insurer promptly after loss, cooperating in claims investigations, providing proof of loss, and adhering to specified timeframes for filing claims. Insuring agreements describe the coverage provided, exclusions specify what is not covered, and declarations provide details about the insured and insured property. Question 52. State insurance laws and regulations. In Alaska, which entity oversees the licensing and regulation of insurance producers, agents, and brokers to ensure compliance with state insurance laws? A. Alaska Insurance Regulatory Agency. B. Alaska Division of Insurance. C. Alaska Insurance Commission. D. Alaska Department of Commerce. Answer: B. Alaska Division of Insurance. Explanation: in Alaska, the Alaska Division of Insurance oversees the licensing and regulation of insurance producers, agents, and brokers to ensure compliance with state insurance laws. This division operates under the Alaska Department of Commerce, Community, and Economic Development. Its responsibilities include licensing insurance professionals, monitoring insurer solvency, investigating consumer complaints, and enforcing insurance laws to protect consumers and maintain fair market practices. The Alaska Insurance Regulatory Agency and Alaska Insurance Commission are not specific entities responsible for insurance regulation in Alaska. Question 53. Insurance industry trends and developments. In Alaska, what emerging trend in insurance is driven by advancements in technology and data analytics aimed at improving risk assessment and customer experience? A. Increased reliance on manual underwriting processes. B. Expansion of traditional insurance agency models. C. Adoption of blockchain technology for claims processing. D. Integration of telematics for usage-based insurance. Answer: D. Integration of telematics for usage-based insurance. Explanation: in Alaska, as in the broader insurance industry, an emerging trend driven by advancements in technology and data analytics is the integration of telematics for usage-based insurance. UB telematics involves the use of devices or sensors to collect data on policyholders' behaviors, such as driving habits or property usage patterns. Insurers can analyze this data to assess risk more accurately, offer personalized pricing based on actual behaviors, and enhance customer experience by providing incentives for safer practices. This trend reflects a shift towards leveraging real-time data insights to improve underwriting precision, mitigate risks, and optimize insurance offerings. Increased reliance on manual underwriting processes, expansion of traditional agency models, and adoption of blockchain technology for claims processing are also influenced by technology but are not specific trends related to UBI in Alaska. Question 54. Scenario-based workers' compensation insurance. Sarah owns a small business in Alaska and is required to provide workers' compensation insurance for her employees. One of her employees sustains an injury while performing work duties. What is Sarah's primary responsibility under Alaska law regarding workers' compensation? A. Deny the employee's claim due to insufficient evidence. B. Provide immediate wage replacement without investigation. C. Report the injury to her workers' compensation insurer. D. Require the injured employee to cover medical expenses. C. Report the injury to her workers' compensation insurer. Explanation: In Alaska, Sarah's primary responsibility regarding workers' compensation is to promptly report the injury to her workers' compensation insurer. Alaska law mandates that employers notify their insurer about workplace injuries as soon as possible after learning about them. Reporting ensures that the injured employee receives timely medical treatment and wage replacement benefits, as required under workers' compensation laws. It also initiates the claims process, allowing the insurer to investigate the incident, determine coverage, and provide necessary benefits to the injured worker. Failing to report injuries promptly can lead to penalties and legal consequences for employers. Therefore, Sarah must prioritize reporting the injury to a workers' compensation insurer to comply with Alaska state regulations and fulfill her duty of care towards her employees. Question 55. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the specific circumstances or events that are excluded from coverage? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: C. Exclusions. Explanation: in Alaska, the exclusions section of an insurance policy typically outlines the specific circumstances or events that are excluded from coverage. These exclusions define the limitations of coverage under the policy and specify situations where the insurer will not provide compensation or benefits. Exclusions are important for policyholders to understand as they clarify the scope of coverage and highlight potential gaps in protection. Insuring agreements describe what is covered under the policy, conditions outline the obligations of both parties, and declarations provide basic information about the policyholder and insured property. Question 56. Underwriting considerations. When underwriting a homeowner's insurance policy in Alaska, which factor is most likely to influence the premium related to property coverage? A. The policyholder's credit score. B. The presence of a home security system. C. The replacement cost of the home. D. The age of the policyholder. Answer: C. The replacement cost of the home. Explanation: in Alaska, the replacement cost of the home is a significant factor that influences the premium for homeowners insurance coverage. The replacement cost refers to the amount needed to rebuild or repair the home to its original condition in the event of a covered loss. Insurers consider factors such as the home's size, construction materials, location, and local building costs to assess the replacement cost and determine the premium. While the policyholder's credit score and the presence of a home security system may impact premium rates, the replacement cost of the home is typically a primary factor in underwriting homeowners insurance policies. Question 57. Casualty insurance. In Alaska, which type of casualty insurance policy would typically cover damages resulting from a lawsuit filed against a business for bodily injury or property damage caused by its products? A. General liability insurance policy. B. Professional liability insurance policy. C. Directors and officers liability insurance policy. D. Errors and omissions insurance policy. Answer: A. General liability insurance policy. Explanation: in Alaska, a general liability insurance policy typically covers damages resulting from lawsuits filed against a business for bodily injury or property damage caused by its products or operations. This type of casualty insurance provides broad coverage for common risks faced by businesses, including third-party claims alleging negligence, personal injury, or property damage. Professional liability insurance, errors and omissions insurance, covers claims related to professional services, while directors and officers liability insurance addresses claims against company executives for mismanagement or breach of fiduciary duties. General liability insurance is specifically designed to protect businesses from a wide range of liability risks, making it essential for most commercial operations in Alaska. Question 58. Insurance claims. Jane, a homeowner in Alaska, discovers water damage in her basement due to a burst pipe. She promptly notifies her insurance company and files a claim for the damages. According to Alaska state regulations, what should Jane expect during the claims handling process? A. Immediate approval of the claim without investigation. B. A request for documentation and evidence of the damage. C. Denial of the claim due to lack of coverage. D. No response from the insurance company for several months. Answer: B. A request for documentation and evidence of the damage. Explanation: in Alaska, when Jane files a homeowner's insurance claim for water damage, she should expect her insurance company to request documentation and evidence of the damage during the claims handling process. Insurers typically require proof of loss, such as photographs, repair estimates, and possibly an inspection of the damaged property. This process allows the insurer to assess the extent of the damage, verify coverage under the policy, and determine the appropriate settlement amount. Immediate approval without investigation or denial without proper review would not comply with Alaska state regulations, which require insurers to conduct a fair and thorough evaluation of claims. Question 59. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to act in the best interests of your clients and prioritize their needs over your own? A. Duty of disclosure. B. Duty of loyalty. C. Duty of competence. D. Duty of good faith. Answer: B. Duty of loyalty. Explanation: in Alaska, the duty of loyalty requires insurance agents to act in the best interests of their clients and prioritize their clients' needs over their own. This ethical principle emphasizes the importance of maintaining trust, honesty, and transparency in all client interactions. Agents must avoid conflicts of interest and disclose any factors that could influence their advice or recommendations. The duty of disclosure requires agents to provide accurate and complete information about insurance products and services. The duty of competence obligates agents to possess the necessary knowledge and skills to provide professional service, while the duty of good faith requires agents to act honestly and fairly in all dealings with clients. Question 60. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the circumstances under which coverage may be cancelled or non-renewed by the insurer? A. Insuring agreements. B. Exclusions. C. Conditions. D. Declarations. Answer: C. Conditions. Explanation: in Alaska, the conditions section of an insurance policy typically outlines the circumstances under which coverage may be cancelled or non-renewed by the insurer. This section specifies the procedures and requirements that govern the termination of coverage, including notice periods, reasons for cancellation or non-renewal, and any applicable refund provisions. Conditions also address other contractual obligations of both the insured and the insurer, such as premium payment, claims handling procedures, and changes in policy terms. Insuring agreements describe the scope of coverage provided, exclusions list specific perils or events not covered, and declarations provide basic information about the insured and insured property. Question 61. Workers' compensation insurance. Under Alaska state law, which party typically administers workers' compensation benefits to injured employees? A. The employer's insurance company. B. The Alaska Division of Workers' Compensation. C. The Occupational Safety and Health Administration, OSHA. D. The Alaska Department of Labor and Workforce Development. Answer: A. The employer's insurance company. Explanation: in Alaska, workers' compensation benefits are typically administered by the employer's insurance company. Employers are required to carry workers' compensation insurance to provide benefits to employees who suffer work-related injuries or illnesses. The insurance company handles claims processing, including medical treatment expenses, wage replacement benefits, and other compensation as mandated by state law. The Alaska Division of Workers' Compensation oversees compliance with workers' compensation laws, resolves disputes, and ensures fair treatment for injured workers, but it is not directly responsible for administering benefits. Question 62. Insurance policy analysis. In Alaska, which section of an insurance policy typically defines the procedures for resolving disputes between the insured and the insurer? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: B. Conditions. Explanation: in Alaska, the conditions section of an insurance policy typically defines the procedures for resolving disputes between the insured and the insurer. This section outlines the steps that both parties must follow in the event of disagreements or disputes related to coverage, claims handling, or other policy-related matters. Conditions may include requirements for mediation, arbitration, or litigation processes to settle disputes according to the terms specified in the policy. Insuring agreements describe the scope of coverage provided, exclusions specify what is not covered, and declarations provide basic information about the insured and insured property. Question 63. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to maintain confidentiality of client information? A. Duty of disclosure. B. Duty of loyalty. C. Duty of competence. D. Duty of confidentiality. Answer: D. Duty of confidentiality. Explanation: in Alaska, the duty of confidentiality requires insurance agents to maintain the confidentiality of client information obtained during the course of their professional duties. This ethical principle protects the privacy and sensitive information of clients, including personal and financial details, medical records, and other confidential data. Agents must handle client information responsibly, disclose information only as authorized by the client or required by law, and take measures to safeguard confidentiality against unauthorized access or disclosure. The duty of disclosure requires agents to provide accurate and complete information about insurance products and services, while the duties of loyalty and competence emphasize acting in the best interest of clients and possessing the necessary knowledge and skills to provide professional service. Question 64. Insurance underwriting. When underwriting an auto insurance policy in Alaska, which factor is typically considered to assess the risk associated with the insured vehicle? A. The driver's age. B. The vehicle's make and model. C. The driver's occupation. D. The driver's annual income. Answer: B. The vehicle's make and model. Explanation: in Alaska, when underwriting an auto insurance policy, the vehicle's make and model are typically considered to assess the risk associated with the insured vehicle. Insurers evaluate factors such as the vehicle's safety features, repair costs, theft rates, and performance characteristics to determine the likelihood of claims and establish appropriate premium rates. While the driver's age, occupation, and income may also influence premium rates, the make and model of the vehicle are primary factors in assessing the risk profile for auto insurance purposes. Question 65. Insurance claims. John, a business owner in Alaska, recently experienced a fire that caused significant damage to his commercial property. He files a claim with his commercial property insurance company. According to Alaska state regulations, what should John expect during the claims handling process? A. Immediate denial of the claim due to fire-related damage. B. A thorough investigation of the fire incident and property damage. C. Automatic approval of the claim without documentation. D. Requirement to pay a deductible before the claim is processed. Answer: B. The thorough investigation of the fire incident and property damage. Explanation: in Alaska, when John files a commercial property insurance claim for fire damage, he should expect his insurance company to conduct a thorough investigation of the fire incident and property damage during the claims handling process. Insurers typically assess the cause and extent of the damage, review policy coverage, and verify the authenticity of the claim through documentation and possibly an inspection of the damaged property. This process ensures that the insurer accurately evaluates the claim and determines the appropriate settlement amount based on the terms of the insurance policy. Immediate denial without investigation, automatic approval without documentation, or requiring payment of a deductible before processing would not align with Alaska state regulations governing fair claims handling practices. Question 66. State insurance laws and regulations. In Alaska, which regulatory authority is responsible for overseeing the financial solvency of insurance companies operating within the state? A. Alaska Division of Insurance. B. Alaska Insurance Regulatory Agency. C. Alaska Insurance Commission. D. Alaska Department of Commerce, Community, and Economic Development. Answer: A. Alaska Division of Insurance. Explanation: in Alaska, the Alaska Division of Insurance is responsible for overseeing the financial solvency of insurance companies operating within the state. This division operates under the Alaska Department of Commerce, Community, and Economic Development and regulates insurance companies to ensure they maintain adequate financial reserves to meet their obligations to policyholders. The Division of Insurance monitors insurer solvency, conducts financial examinations, and takes regulatory actions to protect consumers and maintain stability in the insurance market. The Alaska Insurance Regulatory Agency and Alaska Insurance Commission are not specific entities responsible for overseeing financial solvency in Alaska. Rather, these functions fall under the jurisdiction of the Division of Insurance. Question 67. Insurance industry trends and developments. In Alaska, what recent trend in insurance reflects a shift towards offering personalized insurance products based on individual behaviors and risk profiles? A. Increased use of traditional insurance agency models. B. Expansion of captive insurance companies. C. Adoption of usage-based insurance (UB) programs. D. Implementation of standardized insurance policies. Answer: C. Adoption of usage-based insurance (UB) programs. Explanation: in Alaska, as in the broader insurance industry, the adoption of usage-based insurance (UB) programs reflects a recent trend towards offering personalized insurance products based on individual behaviors and risk profiles. UBI programs use telematics technology to monitor policyholders' driving habits, property usage patterns, or other behaviors relevant to the insured risk. Insurers analyze this data to assess risk more accurately and offer customized premiums and coverage options tailored to the policyholder's specific risk profile. This trend represents a shift towards leveraging technology and data analytics to enhance underwriting precision, improve customer satisfaction, and incentivize safer behaviors among policyholders. Question 68. Insurance policy analysis. In Alaska, which section of an insurance policy typically defines the responsibilities and obligations of the insured and the insurer? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: B. Conditions. Explanation: in Alaska, the conditions section of an insurance policy typically defines the responsibilities and obligations of both the insured and the insurer. This section outlines the procedural requirements, duties, and rights that govern the contractual relationship between the parties. Conditions may include provisions related to premium payments, claims handling procedures, notification requirements for changes or losses, and terms for policy cancellation or renewal. Insuring agreements describe the scope of coverage provided by the policy, exclusions specify what is not covered, and declarations provide basic information about the insured and insured property. Question 69. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to provide accurate and unbiased information to clients about insurance products and services? A. Duty of loyalty. B. Duty of disclosure. C. Duty of competence. D. Duty of good faith. Answer: C. Duty of competence. Explanation: in Alaska, the duty of competence requires insurance agents to provide accurate, unbiased, and professional advice to clients regarding insurance products and services. This ethical principle emphasizes the importance of possessing the necessary knowledge, skills, and qualifications to effectively advise clients on their insurance needs. Agents are expected to stay informed about industry developments, understand insurance policies and regulations, and provide recommendations that are in the best interests of their clients. While the duty of loyalty requires agents to act in the best interests of their clients, the duty of disclosure mandates transparency in providing information, and the duty of good faith obligates agents to act honestly and fairly. The duty of competence specifically pertains to maintaining a high standard of professional knowledge and expertise in insurance practice. Question 70. Casualty insurance. In Alaska, which type of casualty insurance policy would typically cover legal expenses and damages arising from a lawsuit filed against a business for alleged negligence resulting in bodily injury or property damage? A. Workers' compensation insurance. B. Commercial general liability insurance. C. Directors and officers liability insurance. D. Errors and omissions insurance. Answer: B. Commercial general liability insurance. Explanation: in Alaska, commercial general liability (CGL) insurance typically covers legal expenses and damages arising from lawsuits alleging negligence that results in bodily injury or property damage. This type of casualty insurance provides broad protection for businesses against third-party claims for accidents, injuries, and property damage occurring on business premises or as a result of business operations. Workers' compensation insurance covers employees' work-related injuries or illnesses. Directors' and officers' liability insurance addresses claims against company executives and errors and omissions. Insurance protects professionals against claims for inadequate work or negligent acts. However, CGL insurance specifically covers liability risks related to general business operations and premises. Question 71. Insurance contract formation. In Alaska, which legal concept ensures that both parties to an insurance contract enter into the agreement voluntarily and with a clear understanding of the terms and conditions? A. Consideration. B. Offer and acceptance. C. Ubermi fide. D. Legal capacity. Answer: B. Offer and acceptance. Explanation: in Alaska, as in contract law generally, the legal concepts of offer and acceptance ensure that both parties to an insurance contract enter into the agreement voluntarily and with a clear understanding of the terms and conditions. Offer refers to the proposal made by one party, the insurer, to another, the insured, indicating willingness to enter into the contract under certain terms. Acceptance occurs when the other party, the insured, agrees to the offer, thereby forming a binding agreement. Consideration refers to the exchange of value between the parties. Ubermi fide. Utmost good faith relates to the duty of honesty and disclosure in insurance contracts, and legal capacity ensures that both parties have the legal competence to enter into the contract. However, offer and acceptance are specifically essential to the formation and mutual agreement of an insurance contract. Question 72. Insurance underwriting. When underwriting a homeowner's insurance policy in Alaska, which factor is typically evaluated to assess the risk associated with the insured property's location? A. The homeowner's credit score. B. The age of the homeowner. C. The proximity to fire hydrants. D. The homeowner's annual income. Answer: C. The proximity to fire hydrants. Explanation: in Alaska, when underwriting a homeowner's insurance policy, the proximity to fire hydrants is typically evaluated to assess the risk associated with the insured property's location. Insurers consider factors such as the availability of fire protection services, including fire hydrants and fire stations, to determine the property's susceptibility to fire-related losses. Homes located closer to fire hydrants may receive lower premiums due to reduced risk of extensive fire damage and quicker emergency response times. While the homeowner's credit score, age, and income may also influence premium rates, the proximity to fire hydrants directly impacts the property's risk profile for homeowners' insurance purposes. Question 73. Insurance claims. Mary, a policyholder in Alaska, experiences a burglary at her home and files a claim with her homeowner's insurance company. According to Alaska state regulations, what is Mary's responsibility during the claims handling process? A. Providing an inventory of stolen items without proof of purchase. B. Cooperating with the insurer's investigation and providing documentation. C. Refusing to allow the insurer access to her property for inspection. D. Demanding immediate payment without verifying coverage. Answer: B. Cooperating with the insurer's investigation and providing documentation. Explanation: in Alaska, when Mary files a homeowner's insurance claim for burglary, she is responsible for cooperating with the insurer's investigation and providing documentation to support her claim during the claims handling process. This includes providing proof of loss, such as a detailed inventory of stolen items with receipts or other evidence of ownership, and allowing the insurer access to her property for inspection if required. Cooperation helps the insurer assess the validity of the claim, verify coverage under the policy, and determine the appropriate settlement amount. Refusing access to the property or demanding immediate payment without verification would not align with Alaska state regulations, which require policyholders to participate in a fair and thorough claims investigation process. Question 74. Insurance policy analysis. In Alaska, which section of an insurance policy typically specifies the perils or events for which coverage is not provided? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: C. Exclusions. Explanation: in Alaska, the exclusions section of an insurance policy typically specifies the perils or events for which coverage is not provided. Exclusions define the limits of coverage under the policy by excluding certain risks or circumstances that the insurer does not intend to cover. Policyholders should review exclusions carefully to understand potential gaps in coverage and consider additional endorsements or supplementary policies to address specific risks. Insuring agreements describe what is covered under the policy, conditions outline the rights and responsibilities of both parties, and declarations provide basic information about the insured and insured property. Question 75. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to act with honesty and fairness in all dealings with clients and insurers? A. Duty of loyalty. B. Duty of disclosure. C. Duty of competence. D. Duty of good faith. Answer: D. Duty of good faith. Explanation: in Alaska, the duty of good faith requires insurance agents to act with honesty and fairness in all dealings with clients and insurers. This ethical principle obligates agents to uphold the highest standards of integrity, transparency, and ethical behavior in their professional practice. Agents must provide accurate information, avoid conflicts of interest, and prioritize the interests of their clients in all interactions. The duty of loyalty requires agents to act in the best interests of their clients. The duty of disclosure mandates transparency in providing information about insurance products and services, and the duty of competence emphasizes maintaining the necessary knowledge and skills to provide professional service. Question 76. Insurance contract formation. In Alaska, which legal principle requires both parties to an insurance contract to disclose all relevant information truthfully and completely? A. Doctrine of subrogation. B. Doctrine of utmost good faith, uberumi fide. C. Doctrine of proximate cause. D. Doctrine of strict liability. Answer: B. Doctrine of utmost good faith, uberumi fide. Explanation: in Alaska, the doctrine of utmost good faith, uberumi fide, requires both parties to an insurance contract to disclose all relevant information truthfully and completely. This principle ensures transparency and honesty in the formation of insurance contracts, requiring the insured to provide accurate information about risks and the insurer to disclose all terms and conditions of coverage. Failure to disclose material information could invalidate the insurance contract or affect the insurer's obligations in the event of a claim. The doctrine of subrogation allows insurers to recover costs from third parties responsible for a loss. The doctrine of proximate cause determines the legal cause of loss for coverage purposes, and the doctrine of strict liability imposes liability without fault for certain hazardous activities or products. Question 77. Insurance claims. Tom, a business owner in Alaska, files a claim under his commercial property insurance policy for damage caused by a recent storm. According to Alaska state regulations, what must Tom demonstrate to support his claim? A. Proof of his business's profitability. B. Proof of previous insurance claims. C. Proof of the storm's impact on his property. D. Proof of his business's tax returns. Answer: C. Proof of the storm's impact on his property. Explanation: in Alaska, when filing a commercial property insurance claim for storm damage, Tom must demonstrate proof of the storm's impact on his property to support his claim. This typically involves providing evidence such as photographs, repair estimates, and documentation showing the extent of damage caused by the storm. Insurers rely on this proof to assess the validity of the claim, verify coverage under the policy, and determine the appropriate settlement amount. Proof of profitability. Previous insurance claims or tax returns are not directly relevant to demonstrating the impact of the storm on the insured property and would not typically be required to support a property insurance claim. Question 78. Insurance underwriting. When underwriting a liability insurance policy for a construction company in Alaska, which factor is typically considered most important to assess the risk associated with the company's operations? A. The company's annual revenue. B. The number of employees. C. The company's safety record. D. The company's advertising budget. Answer: C. The company's safety record. Explanation: in Alaska, when underwriting a liability insurance policy for a construction company, the company's safety record is typically considered the most important factor to assess the risk associated with its operations. Insurers evaluate the company's safety practices, incident history, compliance with safety regulations, and commitment to risk management to determine the likelihood of claims and establish appropriate premium rates. A strong safety record reduces the risk of accidents, injuries, and liability claims, which can influence insurers' willingness to provide coverage and affect premium pricing, while the company's annual revenue, number of employees, and advertising budget may also impact liability insurance considerations. The safety record directly reflects the company's risk management practices and operational safety standards. Question 79. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the circumstances under which coverage may be cancelled or terminated by the insurer? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: B. Conditions. Explanation: in Alaska, the conditions section of an insurance policy typically outlines the circumstances under which coverage may be cancelled or terminated by the insurer. This section specifies the procedures, requirements, and reasons for cancellation or termination, including notice periods, grounds for cancellation, such as non-payment of premiums or material misrepresentation, and any applicable refund provisions. Policyholders should review the conditions carefully to understand their rights and responsibilities regarding policy cancellation and ensure compliance with insurer requirements to maintain continuous coverage. Question 80. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to act with fairness and impartiality when handling client transactions and claims? A. Duty of loyalty. B. Duty of disclosure. C. Duty of fairness. D. Duty of competence. Answer: C. Duty of fairness. Explanation: in Alaska, the duty of fairness requires insurance agents to act with fairness and impartiality when handling client transactions and claims. This ethical principle emphasizes treating all clients equitably, avoiding discrimination or favoritism, and ensuring transparency in dealings. Agents must uphold the principles of fairness in assessing client needs, recommending suitable insurance products, and resolving claims disputes. While the duty of loyalty requires agents to act in the best interests of their clients, the duty of disclosure mandates transparency in providing information about insurance products and services, and the duty of competence requires agents to maintain the necessary knowledge and skills to provide professional service. The duty of fairness specifically pertains to ensuring equitable treatment and impartiality in client interactions. Question 81. State insurance laws and regulations. In Alaska, which regulatory authority oversees the licensing and conduct of insurance producers, agents, and brokers? A. Alaska Department of Insurance. B. Alaska Division of Insurance Licensing. C. Alaska Insurance Regulatory Commission. D. Alaska Department of Commerce, Community, and Economic Development. Answer: A. Alaska Department of Insurance. Explanation: in Alaska, the Alaska Department of Insurance oversees the licensing and conduct of insurance producers, which include insurance agents and brokers. This department operates under the Alaska Department of Commerce, Community, and Economic Development and regulates insurance industry practices to protect consumers, ensure compliance with state insurance laws, and promote fair and ethical business practices. The Department of Insurance issues licenses to insurance producers, monitors their activities, and enforces regulatory standards to maintain professionalism and integrity in the insurance marketplace. The Alaska Division of Insurance Licensing and Alaska Insurance Regulatory Commission are not specific regulatory authorities in Alaska. Rather, these functions fall under the jurisdiction of the Alaska Department of Insurance. Question 82. Insurance claims. Jane, a policyholder in Alaska, files a claim under her auto insurance policy for damages resulting from a recent collision. According to Alaska state regulations, what is Jane's responsibility during the claims handling process? A. Providing false information to expedite claim processing. B. Cooperating with the insurer's investigation and providing truthful information. C. Refusing to allow the insurer access to her damaged vehicle. D. Demanding payment without submitting any documentation. Answer: B. Cooperating with the insurer's investigation and providing truthful information. Explanation: in Alaska, when Jane files an auto insurance claim for damages resulting from a collision, she is responsible for cooperating with the insurer's investigation and providing truthful information during the claims handling process. This includes providing accurate details about the accident, submitting necessary documentation such as repair estimates and police reports, and allowing the insurer access to her damaged vehicle for inspection if required. Cooperation helps the insurer assess the validity of the claim, verify coverage under the policy, and determine the appropriate settlement amount. Providing false information, refusing access to the damaged vehicle, or demanding payment without documentation would not align with Alaska state regulations governing fair claims handling practices. Question 83. Insurance underwriting. When underwriting a commercial liability insurance policy for a restaurant in Alaska, which factor is typically considered most important to assess the risk associated with the restaurant's operations? A. The restaurant's location. B. The restaurant's menu offerings. C. The restaurant's annual revenue. D. The restaurant's compliance with health codes. Answer A. The restaurant's location. Explanation. In Alaska, when underwriting a commercial liability insurance policy for a restaurant, the restaurant's location is typically considered the most important factor to assess the risk associated with its operations. Insurers evaluate factors such as crime rate, proximity to hazardous locations, and general neighborhood risks to determine the likelihood of claims and establish appropriate premium rates. While the restaurant's menu offerings, annual revenue, and compliance with health codes may also influence liability insurance considerations, the location directly impacts the property's risk profile and exposure to various liabilities. Insurers use location-based data to evaluate potential risks and tailor coverage to mitigate specific hazards associated with the restaurant's geographic setting. Question 84. Insurance policy analysis. In Alaska, which section of an insurance policy typically describes the obligations and responsibilities of the insured and the insurer in the event of a covered loss? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer. B. Conditions. Explanation. In Alaska, the conditions section of an insurance policy typically describes the obligations and responsibilities of the insured and the insurer in the event of a covered loss. This section outlines the procedural requirements, duties, and rights that govern the contractual relationship between the parties after loss occurs. Conditions may include provisions related to claims reporting, appraisal processes, cooperation in investigations, and other requirements that both parties must fulfill to facilitate a fair and efficient claims settlement. Insuring agreements specify what is covered under the policy, exclusions outline what is not covered, and declarations provide basic information about the insured and insured property. Understanding the conditions of coverage helps policyholders and insurers navigate the claims handling process and ensures compliance with contractual obligations under Alaska state regulations. Question 85. Workers' compensation insurance. In Alaska, which factor is typically considered when underwriting a workers' compensation insurance policy for a construction company? A. The number of years the company has been in business. B. The company's compliance with safety regulations. C. The company's advertising budget. D. The company's profit margin. Answer. B. The company's compliance with safety regulations. Explanation. In Alaska, when underwriting a workers' compensation insurance policy for a construction company, the company's compliance with safety regulations is typically considered a crucial factor. Insurers assess the company's adherence to occupational safety standards, workplace hazard controls, and safety training programs to evaluate the risk of workplace injuries or accidents. A strong safety record and proactive safety measures can reduce the frequency and severity of workers' compensation claims, which may influence premium rates. While factors such as the company's longevity, financial performance, and marketing expenditures may also be relevant in business assessments, compliance with safety regulations directly impacts the company's risk profile for workers' compensation insurance purposes. Question 86. Casualty insurance. Which type of casualty insurance policy in Alaska typically covers legal expenses and damages arising from claims of bodily injury or property damage caused by the insured's negligent acts or omissions? A. Umbrella liability insurance. B. Errors and omissions insurance. C. Directors and officers liability insurance. D. Commercial general liability insurance. Answer. D. Commercial general liability insurance. Explanation. In Alaska, commercial general liability (CGL) insurance typically covers legal expenses and damages arising from claims of bodily injury or property damage caused by the insured's negligent acts or omissions. This type of casualty insurance provides broad protection for businesses against liability claims from third parties alleging negligence, accidents, or property damage occurring on business premises or as a result of business operations. CGL policies may also cover legal defense costs, settlement negotiations, and judgments awarded against the insured, subject to policy limits and exclusions. Umbrella liability insurance provides additional liability coverage above the limits of primary policies. Errors and omissions insurance protects professionals against claims of inadequate work or negligent acts, and directors and officers liability insurance addresses claims against company executives. Question 87. Insurance contract formation. In Alaska, which legal principle ensures that an insurance contract is binding and enforceable when both parties agree to the terms without duress or coercion? A. Principle of indemnity. B. Principle of utmost good faith. C. Principle of offer and acceptance. D. Principle of insurable interest. Answer: C. Principle of offer and acceptance. Explanation: in Alaska, as in contract law generally, the principle of offer and acceptance ensures that an insurance contract is binding and enforceable when both parties agree to the terms voluntarily without duress or coercion. Offer refers to the proposal made by one party, the insurer, to another, the insured, indicating willingness to enter into the contract under specific terms and conditions. Acceptance occurs when the other party, the insured, agrees to the offer, thereby forming a legally binding agreement. The principle of utmost good faith, ubirmi fide, requires both parties to disclose all material facts truthfully and honestly. The principle of indemnity ensures compensation for losses suffered, and the principle of insurable interest requires the insured to have a legitimate interest in the insured property or person. However, offer and acceptance are specifically essential to the mutual agreement and formation of an enforceable insurance contract under Alaska state regulations. Question 88. Insurance industry trends and developments. In Alaska, what emerging trend in insurance focuses on using advanced data analytics to customize insurance premiums based on individual behaviors and risk profiles? A. Captive insurance programs. B. Blockchain technology in insurance. C. Usage-based insurance (UB) programs. D. Peer-to-peer insurance models. Answer: C. Usage-based insurance (UB) programs. Explanation: in Alaska, usage-based insurance (UB) programs represent an emerging trend in insurance that utilizes advanced data analytics to customize insurance premiums based on individual behaviors and risk profiles. UBI programs typically involve the use of telematics devices or mobile apps to collect data on policyholders' driving habits, property usage patterns, or other relevant behaviors. Insurers analyze this data to assess risk more accurately and offer personalized premiums and coverage options tailored to the policyholder's specific risk profile. This trend reflects a broader industry shift towards leveraging technology and data-driven insights to enhance underwriting precision, improve customer engagement, and incentivize safer behaviors among policyholders. Question 89. Insurance claims. Under Alaska state regulations, what is typically required for a policyholder to initiate the insurance claims process? A. Submitting a claim online. B. Notifying the insurer promptly after loss. C. Contacting an insurance adjuster directly. D. Waiting for the insurer to contact them first. Answer: B. Notifying the insurer promptly after loss. Explanation: in Alaska, policyholders are typically required to notify the insurer promptly after loss to initiate the insurance claims process. Prompt notification allows insurers to begin investigating the claim, assessing damages, and determining coverage eligibility in a timely manner. Policyholders should provide accurate information about the incident, including the date, location, and nature of the loss, to facilitate efficient claims handling. While many insurers offer online claim submission options and direct contact with adjusters, notifying the insurer promptly after a loss is a fundamental requirement under Alaska state regulations to initiate the claims process and ensure timely resolution of claims. Question 90. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to act in the best interests of your clients and prioritize their needs when recommending insurance products? A. Duty of loyalty. B. Duty of disclosure. C. Duty of fairness. D. Duty of care. Answer: D. Duty of care. Explanation: in Alaska, the duty of care requires insurance agents to act in the best interests of their clients and exercise reasonable care, skill, and diligence when recommending insurance products and services. This ethical principle obligates agents to understand their clients' insurance needs, provide accurate information, and offer suitable coverage options that align with the client's financial and risk management objectives. Agents must assess clients' individual circumstances, explain policy terms and conditions clearly, and provide recommendations that prioritize client interests. While the duty of loyalty requires agents to act loyally and avoid conflicts of interest, the duty of disclosure mandates transparency in providing information about insurance products, and the duty of fairness requires equitable treatment in client interactions. The duty of care specifically emphasizes the agent's responsibility to exercise professional competence and diligence in serving clients' insurance needs in Alaska. Question 91. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the procedures and requirements for filing a claim, including deadlines and documentation needed? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer: B. Conditions. Explanation: in Alaska, the conditions section of an insurance policy typically outlines the procedures and requirements for filing a claim, including deadlines and documentation needed. This section specifies the policyholder's responsibilities and obligations in the event of a loss, such as notifying the insurer promptly, providing proof of loss, and cooperating with the claims investigation process. Conditions also detail the insurer's duties, such as conducting a thorough investigation, evaluating coverage, and processing claims within a reasonable time frame. Policyholders should review the conditions section carefully to understand the specific requirements and timelines for filing claims under their insurance policy. Question 92. Insurance underwriting. When underwriting a homeowner's insurance policy in Alaska, which factor is typically evaluated to assess the risk associated with the insured property's location? A. The homeowner's credit score. B. The proximity to fire hydrants. C. The age of the homeowner. D. The homeowner's annual income. Answer: B. The proximity to fire hydrants. Explanation: in Alaska, when underwriting a homeowner's insurance policy, insurers typically evaluate the proximity to fire hydrants to assess the risk associated with the insured property's location. Homes located closer to fire hydrants may receive lower premiums due to reduced risk of extensive fire damage and quicker emergency response times. Insurers consider factors such as the availability of fire protection services, including fire hydrants and fire stations, to determine the property's susceptibility to fire-related losses. While the homeowner's credit score, age, and annual income may also impact premium rates, the proximity to fire hydrants directly influences the property's risk profile for homeowners' insurance purposes. Question 93. Insurance claims. Under Alaska state regulations, what is typically required for a policyholder to submit as proof of loss when filing a property insurance claim? A. A detailed inventory of all personal belongings. B. A copy of the insured property's tax assessment. C. Documentation showing the property's current market value. D. Evidence of the property's condition before the loss. Answer: D. Evidence of the property's condition before the loss. Explanation: in Alaska, when filing a property insurance claim, policyholders are typically required to submit evidence of the property's condition before the loss as proof of loss. This may include photographs, videos, receipts, appraisals, or other documentation that demonstrates the property's pre-loss condition and value. Providing evidence of the property's condition before the loss helps insurers assess the extent of damage or loss accurately, verify coverage under the policy, and determine the appropriate settlement amount. While a detailed inventory of personal belongings and documentation of current market value may be relevant for certain types of property insurance claims, evidence of the property's condition before the loss is specifically required to support the claim under Alaska state regulations. Question 94. Insurance industry trends and developments. In Alaska, what type of insurance product is designed to protect businesses from financial losses resulting from interruptions to their normal operations due to covered perils such as fire or natural disasters? A. Business interruption insurance. B. Professional liability insurance. C. Cyber liability insurance. D. Directors and officers insurance. Answer A. Business interruption insurance. Explanation. In Alaska, business interruption insurance is designed to protect businesses from financial losses resulting from interruptions to their normal operations due to covered perils such as fire, natural disasters, or other insured events. This insurance coverage typically helps businesses recover lost income, pay ongoing expenses such as rent or employee salaries, and cover additional costs incurred to resume operations after a covered disruption. Business interruption insurance is crucial for businesses to mitigate financial risks associated with unforeseen events that impact their ability to generate revenue, while professional liability insurance protects against claims of negligence or errors in professional services. Cyber liability insurance addresses losses from data breaches or cyber attacks, and directors and officers insurance protects company executives from liability claims. Business interruption insurance specifically focuses on mitigating financial losses due to operational disruptions. Question 95. Insurance claims. Under Alaska state regulations, what is the primary purpose of the appraisal process in insurance claims handling? A. To determine the insurance premium adjustments. B. To assess the market value of the insured property. C. To resolve disputes over the value of a loss. D. To calculate the insurer's profit margins. Answer. C. To resolve disputes over the value of a loss. Explanation. In Alaska, the primary purpose of the appraisal process in insurance claims handling is to resolve disputes over the value of a loss between the policyholder and the insurer. The appraisal process involves an independent assessment of the loss by an appraiser chosen by each party or appointed by the court, if necessary. Appraisers evaluate the extent of damage, determine the appropriate repair or replacement costs, and facilitate a fair settlement between the parties based on their findings. This process helps resolve disagreements over the value of a loss and ensures that policyholders receive fair compensation under the terms of their insurance policy. While insurance premium adjustments, market value assessments, and calculations of insurer profit margins may be factors in insurance operations, the appraisal process specifically focuses on resolving disputes related to claims valuation under Alaska state regulations. Question 96. Insurance policy analysis. In Alaska, which section of an insurance policy typically specifies the amount of coverage provided for different types of losses or liabilities? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer A. Insuring agreements. Explanation. In Alaska, the insuring agreements section of an insurance policy typically specifies the amount of coverage provided for different types of losses or liabilities. Insuring agreements outline the scope of coverage, describing the risks or perils against which the insurer provides protection and detailing the extent of financial compensation or benefits available under the policy. Policyholders should review the insuring agreements carefully to understand the specific types of losses or liabilities covered, the limits of coverage, any deductible amounts, and other relevant terms and conditions. What conditions outline the procedural requirements and obligations of both parties. Exclusions specify circumstances or risks not covered under the policy, and declarations provide basic information about the insured and insured property. Insuring agreements directly define the extent and nature of insurance coverage provided under Alaska state regulations. Question 97. Insurance underwriting. When underwriting a commercial property insurance policy in Alaska, which factor is typically considered most important to assess the risk associated with the insured property? A. The property's proximity to flood zones. B. The property owner's credit score. C. The property's historical significance. D. The property's age. Answer A. The property's proximity to flood zones. Explanation. In Alaska, when underwriting a commercial property insurance policy, the property's proximity to flood zones is typically considered the most important factor to assess the risk associated with the insured property. Insurers evaluate flood risk based on geographic location, elevation, historical flood data, and proximity to bodies of water or flood-prone areas. Properties located in high-risk flood zones may face greater exposure to flood-related damage, influencing insurance premium rates and coverage options. While factors such as the property owner's credit score, historical significance, and age may also impact insurance considerations, proximity to flood zones directly affects the property's risk profile for commercial property insurance purposes. Question 98. State insurance laws and regulations. Under Alaska state regulations, which entity is responsible for overseeing the licensing and regulation of insurance companies operating within the state? A. Alaska Department of Insurance. B. Alaska Division of Insurance Licensing. C. Alaska Insurance Regulatory Commission. D. Alaska Department of Commerce, Community, and Economic Development. Answer A. Alaska Department of Insurance. Explanation. In Alaska, the Alaska Department of Insurance is responsible for overseeing the licensing and regulation of insurance companies operating within the state. This department operates under the Alaska Department of Commerce, Community, and Economic Development and regulates insurance industry practices to protect consumers, ensure compliance with state insurance laws, and promote fair and ethical business practices. The Department of Insurance issues licenses to insurance companies, monitors their financial solvency and compliance with regulatory standards, and investigates consumer complaints or disputes related to insurance practices. The Alaska Division of Insurance Licensing and Alaska Insurance Regulatory Commission are not specific regulatory authorities in Alaska. These functions fall under the jurisdiction of the Alaska Department of Insurance. Question 99. Insurance contracts. In Alaska, which legal principle ensures that insurance contracts are interpreted in a manner that gives effect to the parties' intentions and the reasonable expectations of the insured? A. Principle of indemnity. B. Principle of utmost good faith. C. Principle of reasonable expectations. D. Principle of insurable interest. Answer. C. Principle of reasonable expectations. Explanation. In Alaska, the principle of reasonable expectations ensures that insurance contracts are interpreted in a manner that gives effect to the parties' intentions and the reasonable expectations of the insured. This principle aims to protect the insured's reasonable expectations of coverage, even if specific policy language or technicalities might suggest otherwise. Courts may consider factors such as the insured's understanding of policy terms, the insurer's representations during the sales process, and industry standards when interpreting insurance contracts under the principle of reasonable expectations. While the principle of indemnity ensures compensation for actual losses suffered, the principle of utmost good faith requires honest and full disclosure by both parties, and the principle of insurable interest requires the insured to have a legitimate interest in the insured property or person. The principle of reasonable expectations specifically addresses interpretations of insurance policy terms to align with insured expectations under Alaska state regulations. Question 100. Insurance policy analysis. In Alaska, which section of an insurance policy typically lists specific events or circumstances that are not covered under the policy? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer. C. Exclusions. Explanation. In Alaska, the exclusions section of an insurance policy typically lists specific events or circumstances that are not covered under the policy. Exclusions specify risks or perils for which the insurer will not provide coverage, such as intentional acts, certain natural disasters, or specific types of property damage. Policyholders should review the exclusions section carefully to understand the limitations of coverage and potential gaps in protection under their insurance policy. While insuring agreements outline the scope of coverage provided, conditions specify procedural requirements and obligations, and declarations provide basic information about the insured and insured property. Exclusions directly define the risks or perils excluded from coverage under Alaska state regulations. Question 101. Casualty insurance. Which type of casualty insurance in Alaska typically covers legal expenses and damages resulting from claims of bodily injury or property damage caused by the insured's negligent acts or omissions? A. Personal umbrella insurance. B. Errors and omissions insurance. C. Directors and officers liability insurance. D. Commercial general liability insurance. Answer. D. Commercial general liability insurance. Explanation. In Alaska, commercial general liability (CGL) insurance typically covers legal expenses and damages resulting from claims of bodily injury or property damage caused by the insured's negligent acts or omissions. This type of casualty insurance provides broad protection for businesses against liability claims from third parties alleging negligence, accidents, or property damage occurring on business premises or as a result of business operations. CGL policies may also cover legal defense costs, settlement negotiations, and judgments awarded against the insured, subject to policy limits and exclusions. Personal umbrella insurance provides additional liability coverage above the limits of primary policies. Errors and omissions insurance protects against claims of professional negligence or inadequate work, and directors' and officers' liability insurance addresses claims against company executives for alleged wrongful acts. Question 102. Ethics and professional conduct. As an insurance agent in Alaska, which ethical principle requires you to act with honesty and transparency in all communications and transactions with clients? A. Duty of loyalty. B. Duty of disclosure. C. Duty of fairness. D. Duty of care. Answer: B. Duty of disclosure. Explanation: in Alaska, the duty of disclosure requires insurance agents to act with honesty and transparency in all communications and transactions with clients. This ethical principle obligates agents to provide clear and accurate information about insurance products, policy terms, coverage options, and any potential conflicts of interest that may affect the client's decision-making process. Agents must disclose material facts relevant to the client's insurance needs, including coverage limitations, exclusions, and potential risks associated with insurance products recommended. While the duty of loyalty requires agents to act in the best interests of their clients, the duty of fairness mandates equitable treatment in client interactions, and the duty of care emphasizes professional competence and diligence in serving clients' insurance needs. The duty of disclosure specifically addresses the agent's responsibility to ensure transparency and informed decision-making by clients under Alaska state regulations. Question 103. Insurance claims. Under Alaska state regulations, what is typically required for a policyholder to provide when filing a claim for damage to their property? A. Proof of recent renovations. B. Detailed inventory of personal belongings. C. Documentation of the property's current market value. D. Evidence of the cause and extent of the damage. Answer: D. Evidence of the cause and extent of the damage. Explanation: in Alaska, when filing a claim for damage to property, policyholders are typically required to provide evidence of the cause and extent of the damage. This may include photographs, repair estimates, receipts, or other documentation that substantiates the claim and helps insurers assess the validity of the loss. Providing evidence of the cause and extent of damage is essential for insurers to determine coverage eligibility, evaluate the extent of liability, and calculate the appropriate settlement amount under the terms of the insurance policy. While proof of recent renovations, detailed inventory of personal belongings, and documentation of the property's current market value may be relevant for certain types of property insurance claims, evidence of the cause and extent of the damage is specifically required to support claims under Alaska state regulations. Question 104. Insurance contract formation. In Alaska, which legal principle ensures that an insurance contract is enforceable when both parties agree to the terms and conditions voluntarily? A. Principle of indemnity. B. Principle of utmost good faith. C. Principle of offer and acceptance. D. Principle of consideration and premium. Answer: C. Principle of offer and acceptance. Explanation: in Alaska, as in contract law generally, the principle of offer and acceptance ensures that an insurance contract is enforceable when both parties agree to the terms and conditions voluntarily. Offer refers to the proposal made by one party, the insurer, to another, the insured, indicating willingness to enter into the contract under specific terms and conditions. Acceptance occurs when the other party, the insured, agrees to the offer, thereby forming a legally binding agreement. The principle of offer and acceptance is fundamental to the formation of insurance contracts and requires mutual consent without duress or coercion. While the principle of utmost good faith requires honest and full disclosure by both parties, the principle of indemnity ensures compensation for actual losses suffered, and the principle of consideration and premium involves the exchange of value for insurance coverage. Offer and acceptance specifically addresses mutual agreement and enforceability of insurance contracts under Alaska state regulations. Question 105. Workers' compensation insurance. In Alaska, which factor is typically considered when underwriting a workers' compensation insurance policy for a construction company? A. The company's compliance with safety regulations. B. The number of years the company has been in business. C. The company's advertising budget. D. The company's profit margin. Answer A. The company's compliance with safety regulations. Explanation. In Alaska, when underwriting a workers' compensation insurance policy for a construction company, the company's compliance with safety regulations is typically considered a crucial factor. Insurers assess the company's adherence to occupational safety standards, workplace hazard controls, and safety training programs to evaluate the risk of workplace injuries or accidents. A strong safety record and proactive safety measures can reduce the frequency and severity of workers' compensation claims, which may influence premium rates. While factors such as the number of years in business, advertising budget, and profit margin may also be relevant in business assessments, compliance with safety regulations directly impacts the company's risk profile for workers' compensation insurance purposes in Alaska. Question 106. Insurance policy analysis. In Alaska, which section of an insurance policy typically outlines the responsibilities and obligations of both the insured and the insurer in the event of a covered loss? A. Insuring agreements. B. Conditions. C. Exclusions. D. Declarations. Answer. B. Conditions explanation. In Alaska, the conditions section of an insurance policy typically outlines the responsibilities and obligations of both the insured and the insurer in the event of a covered loss. This section specifies procedural requirements, such as notifying the insurer promptly after loss, cooperating in the claims investigation, and providing proof of loss documentation. Conditions also address other contractual obligations, such as policy renewal terms, cancellation provisions, and subrogation rights. Policyholders should review the conditions section carefully to understand their duties and rights under the insurance policy. While insuring agreements define the scope of coverage provided, exclusions list specific events or circumstances not covered, and declarations provide basic information about the insured and insured property. Conditions govern the procedural aspects and mutual obligations in handling claims under Alaska state regulations. Question 107. Insurance underwriting. When underwriting a commercial liability insurance policy in Alaska, which factor is typically evaluated to assess the insured business's financial stability and ability to meet insurance obligations? A. The business's location. B. The business's credit rating. C. The business's advertising strategy. D. The business's customer satisfaction ratings. Answer. B. The business's credit rating. Explanation. In Alaska, when underwriting a commercial liability insurance policy, insurers typically evaluate the business's credit rating to assess its financial stability and ability to meet insurance obligations. A favorable credit rating indicates a business's creditworthiness and financial responsibility, which may reduce the insurer's perceived risk of non-payment of premiums or potential default. Insurers consider factors such as the business's credit history, payment behavior, debt-to-income ratio, and overall financial health when evaluating creditworthiness for commercial liability insurance coverage. While the business's location may influence risk exposure, advertising strategy may impact market competitiveness, and customer satisfaction ratings may reflect business reputation. The business's credit rating specifically assesses financial stability and creditworthiness for insurance underwriting purposes in Alaska. Question 108. Insurance industry trends and developments. In Alaska, what emerging trend in insurance focuses on utilizing artificial intelligence, AI, and machine learning algorithms to enhance claims processing efficiency and accuracy? A. Blockchain technology in insurance. B. Telematics in auto insurance. C. Predictive analytics in claims management. D. Peer-to-peer insurance models. Answer. C. Predictive analytics in claims management. Explanation. In Alaska, predictive analytics in claims management represents an emerging trend in insurance that focuses on utilizing artificial intelligence, AI, and machine learning algorithms to enhance claims processing efficiency and accuracy. Predictive analytics analyze large data sets of historical claims data, customer information, and risk factors to predict claim outcomes, identify fraud patterns, and optimize claims handling processes. Insurers use predictive models to automate claims assessments, expedite claim settlements, and allocate resources more effectively. This trend reflects the insurance industry's adoption of advanced technologies to improve operational efficiency, reduce costs, and enhance customer satisfaction. While blockchain technology enhances transparency and security in insurance transactions, telematics in auto insurance monitors driving behaviors, and peer-to-peer insurance models involve collaborative risk sharing among policyholders. Predictive analytics specifically leverages AI and machine learning to transform claims management practices in Alaska. Question 109. Insurance claims. In Alaska, which step in the claims handling process involves the insurer's evaluation of the claim to determine whether it is covered under the terms of the insurance policy? A. Claims investigation. B. Coverage determination. C. Claims settlement. D. Subrogation. Answer: B. Coverage determination. Explanation: in Alaska, the coverage determination step in the claims handling process involves the insurer's evaluation of the claim to determine whether it is covered under the terms of the insurance policy. During this stage, insurers assess the facts surrounding the loss, review policy provisions, and apply applicable laws and regulations to determine coverage eligibility. Insurers examine the cause of loss, the policy's insuring agreements, exclusions and conditions, and any relevant endorsements to make an informed decision regarding coverage. Coverage determination is critical in claims handling to ensure that policyholders receive benefits to which they are entitled under the terms of their insurance policy. What claims investigation involves gathering evidence and assessing damages, claims settlement resolves financial compensation, and subrogation recovers costs from responsible parties. Coverage determination specifically addresses whether the claim falls within the scope of policy coverage under Alaska state regulations. Question 110. Insurance contracts. Under Alaska state regulations, which element of an insurance contract requires both parties to exchange something of value to make the contract enforceable? A. Consideration and premium. B. Offer and acceptance. C. Conditions and endorsements. D. Representations and warranties. Answer: A. Consideration and premium. Explanation: in Alaska, consideration and premium represent the element of an insurance contract that requires both parties to exchange something of value to make the contract enforceable. Consideration refers to the mutual exchange of promises or obligations between the insurer and the insured. The insured agrees to pay premiums in exchange for the insurer's promise to provide coverage and benefits under the insurance policy. Consideration ensures that both parties have a legal basis for enforcing the terms of the contract and establishes the contractual relationship between the insurer and the insured, while offer and acceptance establish mutual agreement, conditions and endorsements outline procedural obligations and additional terms, and representations and warranties verify the accuracy of statements made. Consideration and premium specifically address the exchange of value necessary for the validity and enforceability of insurance contracts under Alaska state regulations. Question 111. Insurance industry trends and developments. In Alaska, what technology trend in insurance focuses on enhancing customer engagement, streamlining policy management, and improving claims processing through online platforms and mobile applications? A. Insurtech innovations. B. Wearable technology integration. C. Drone technology in claims assessment. D. Blockchain applications in insurance. Answer: A. Insurtech innovations. Explanation: in Alaska, Insurtech innovations represent a technology trend in insurance that focuses on enhancing customer engagement, streamlining policy management, and improving claims processing through online platforms and mobile applications. Insurtech companies leverage technologies such as artificial intelligence, big data analytics, and cloud computing to develop innovative solutions for insurance industry challenges. Insurtech innovations aim to simplify insurance transactions, personalize customer interactions, and optimize operational efficiency for insurers and policyholders alike. These advancements enable faster policy issuance, real-time claims tracking, and enhanced risk assessment capabilities, contributing to a more responsive and customer-centric insurance experience in Alaska. While wearable technology integrates health data in insurance underwriting, drone technology aids in claims assessment, and blockchain applications enhance transaction security and transparency. InsurTech innovations specifically drive digital transformation and innovation in the insurance industry within Alaska. Question 112. Liability and legal concepts. Under Alaska state regulations, which legal concept holds individuals or entities responsible for damages caused by their negligent acts or failure to meet a duty of care? A. Doctrine of subrogation. B. Principle of indemnity. C. Principle of proximate cause. D. Principle of liability. Answer: D. Principle of liability. Explanation: in Alaska, the principle of liability holds individuals or entities responsible for damages caused by their negligent acts or failure to meet a duty of care. This legal concept establishes that parties must exercise reasonable care to avoid causing harm to others. When negligence results in injury or property damage, the injured party may seek compensation for their losses under principles of liability. Courts consider factors such as foreseeability, proximate cause, and the extent of damages in determining liability in civil cases. While the doctrine of subrogation allows insurers to recover costs from responsible parties, the principle of indemnity ensures compensation for actual losses, and the principle of proximate cause links negligent acts to resulting damages. The principle of liability specifically addresses legal accountability for harm caused by negligence under Alaska state regulations. Question 113. Policy interpretation and analysis. In Alaska, which section of an insurance policy specifies the basic information about the insured, including their name, address, and coverage limits? A. Insuring agreements. B. Conditions. C. Declarations. D. Endorsements. Answer: C. Declarations. Explanation: in Alaska, the declarations section of an insurance policy specifies the basic information about the insured, including their name, address, and coverage limits. Declarations provide essential details such as policyholder information, insured property descriptions, policy period, premium amounts, and deductibles. Policyholders should review the declarations section to verify the accuracy of information and ensure that their insurance coverage meets their needs and expectations. While insuring agreements define the scope of coverage provided, conditions outline procedural requirements and obligations, and endorsements modify or add coverage terms. Declarations specifically provide foundational information about the insured and insured property under Alaska state regulations. Question 114. Workers' compensation insurance. Under Alaska state regulations, which entity administers the workers' compensation insurance system and ensures compliance with statutory requirements? A. Alaska Workers' Compensation Board. B. Alaska Department of Labor and Workforce Development. C. Alaska Division of Workers' Compensation. D. Alaska Industrial Commission. Answer: C. Alaska Division of Workers' Compensation. Explanation: in Alaska, the Alaska Division of Workers' Compensation administers the workers' compensation insurance system and ensures compliance with statutory requirements. This division operates under the Alaska Department of Labor and Workforce Development and oversees the implementation of workers' compensation laws, regulations, and policies. The Division of Workers' Compensation facilitates the payment of benefits to injured workers, resolves disputes between injured workers and employers or insurers, and promotes workplace safety and injury prevention initiatives across Alaska, while the Alaska Workers' Compensation Board adjudicates disputes and appeals related to workers' compensation claims, and the Alaska Industrial Commission oversees broader labor and employment issues. The Alaska Division of Workers' Compensation specifically manages the state's workers' compensation insurance program under Alaska state regulations. Question 115. Casualty insurance. In Alaska, which type of casualty insurance policy typically covers legal expenses and damages resulting from claims of bodily injury or property damage caused by the insured's operations or products? A. Personal umbrella insurance. B. Commercial general liability insurance. C. Heirs and omissions insurance. D. Directors and officers liability insurance. Answer: B. Commercial general liability insurance. Explanation: in Alaska, commercial general liability (CGL) insurance typically covers legal expenses and damages resulting from claims of bodily injury or property damage caused by the insured's operations or products. This type of casualty insurance provides broad protection for businesses against liability claims arising from accidents, negligence, or defective products. CGL policies may cover legal defense costs, settlement negotiations, and judgments awarded against the insured, subject to policy limits and exclusions. Personal umbrella insurance extends liability coverage above primary policies. Errors and omissions insurance addresses claims of professional negligence, and directors' and officers' liability insurance protects against claims alleging wrongful acts by company executives. Commercial general liability insurance specifically addresses liability exposures related to business operations and products under Alaska state regulations. Question 116. Insurance industry trends and developments. In Alaska, what technology trend in insurance aims to improve risk assessment, underwriting accuracy, and claims processing by analyzing real-time data from various sources? A. Blockchain applications in insurance. B. Telematics integration in auto insurance. C. Predictive analytics in insurance. D. Artificial intelligence in claims management. Answer: C. Predictive analytics in insurance. Explanation: in Alaska, predictive analytics in insurance represents a technology trend that aims to improve risk assessment, underwriting accuracy, and claims processing by analyzing real-time data from various sources. Predictive analytics use advanced statistical models and machine learning algorithms to evaluate historical data, customer behavior patterns, and risk factors to predict future outcomes and trends in the insurance industry. Insurers leverage predictive analytics to optimize pricing strategies, customize insurance offerings, and enhance decision-making processes across underwriting, claims management, and customer service functions. While blockchain applications enhance transaction security and transparency, telematics integration in auto insurance monitors driving behaviors, and artificial intelligence in claims management automates claims processing tasks. Predictive analytics specifically focuses on data-driven insights to drive operational efficiency and innovation in insurance practices within Alaska. Question 117. State insurance laws and regulations. Under Alaska state regulations, which entity oversees the licensing and regulation of insurance producers, agents, and brokers to ensure compliance with licensing requirements and consumer protection laws? A. Alaska Department of Commerce, Community, and Economic Development. B. Alaska Insurance Regulatory Commission. C. Alaska Division of Insurance Licensing. D. Alaska Insurance Department. Answer A. Alaska Department of Commerce, Community, and Economic Development. Explanation: in Alaska, the Alaska Department of Commerce, Community, and Economic Development oversees the licensing and regulation of insurance producers, agents, and brokers to ensure compliance with licensing requirements and consumer protection laws. This department includes the Division of Insurance, which administers licensing exams, issues licenses to insurance producers, monitors industry practices, and investigates consumer complaints related to insurance transactions. The Alaska Department of Commerce, Community, and Economic Development aims to safeguard consumer interests, promote fair business practices, and maintain the integrity of the insurance marketplace through regulatory oversight and enforcement of state insurance laws and regulations. While the Alaska Insurance Regulatory Commission and Alaska Insurance Department may play roles in insurance oversight, the Department of Commerce, Community, and Economic Development specifically regulates insurance producers under Alaska state regulations. Question 118. Underwriting considerations. When underwriting a homeowner's insurance policy in Alaska, which factor is typically assessed to determine the risk of property damage or loss? A. The homeowner's credit score. B. The home's proximity to fire hydrants. C. The homeowner's employment history. D. The home's square footage. Answer: B. The home's proximity to fire hydrants. Explanation: in Alaska, when underwriting a homeowner's insurance policy, insurers typically assess the home's proximity to fire hydrants to determine the risk of property damage or loss from fire incidents. Homes located closer to fire hydrants are generally considered low risk because they facilitate quicker fire response and suppression by firefighters. Insurers evaluate various factors related to property characteristics, location, and environmental risks to calculate premiums and determine coverage eligibility for homeowners insurance policies. While the homeowner's credit score may influence insurance rates, employment history may impact financial stability, and home size affects replacement cost estimates. Proximity to fire hydrants specifically mitigates fire-related risks in underwriting homeowners insurance policies under Alaska state regulations. Question 119. Insurance contract formation. Under Alaska state regulations, which element of an insurance contract requires insurers to act with honesty and good faith in all dealings with policyholders? A. Principle of offer and acceptance. B. Principle of utmost good faith. C. Principle of consideration. D. Principle of indemnity. Answer. B. Principle of utmost good faith. Explanation. In Alaska, the principle of utmost good faith requires insurers to act with honesty and good faith in all dealings with policyholders. This principle imposes a duty on insurers to provide accurate and complete information about insurance policies, coverage terms, and potential risks to policyholders. Insurers must disclose material facts relevant to policyholders' insurance decisions and avoid misleading or deceptive practices. The principle of utmost good faith underscores the importance of transparency, fairness, and mutual trust in insurance transactions, ensuring that policyholders make informed decisions and receive the coverage they expect under Alaska state regulations. While the principle of offer and acceptance establishes mutual agreement, the principle of consideration requires an exchange of value, and the principle of indemnity ensures compensation for losses suffered. Utmost good faith specifically governs insurers' ethical obligations to policyholders in Alaska. Question 120. Insurance claims. Under Alaska state regulations, which step in the insurance claims handling process involves the insurer's legal right to pursue recovery from responsible parties after compensating the insured for a covered loss? A. Claims investigation. B. Coverage determination. C. Claims settlement. D. Subrogation. Answer. D. Subrogation. Explanation. In Alaska, the subrogation step in the insurance claims handling process involves the insurer's legal right to pursue recovery from responsible parties after compensating the insured for a covered loss. Subrogation allows insurers to recover costs paid to policyholders for damages or losses caused by third parties' negligence or liability. Insurers may seek reimbursement through legal action or negotiation with responsible parties to recover claim payments and minimize financial losses. Subrogation supports the principle of indemnity by preventing unjust enrichment and promoting equitable distribution of liability among parties involved in insurance claims under Alaska state regulations. While claims investigation gathers evidence, coverage determination assesses policy eligibility, and claims settlement resolves financial compensation. Subrogation specifically addresses insurers' rights to pursue recovery against responsible parties in insurance claims handling processes.